What if I told you you could get a copy of the EdgeFinder completely free thanks to this live stream's sponsor, 8cap? 8cap is a regulated brokerage that has a special offer for viewers of our channel here, and I wanted to tell you a little bit about how this offer works. There's really only 3 simple steps to setting up a free copy of EdgeFinder through our partnered broker, 8cap. Step 1 is you have to use the link being dropped in the live stream chat or down below in the description to create a new account. Step 2 is go to this link, scroll down on it, and you'll see the requirements that you must make in order for 8cap to essentially buy a copy of the EdgeFinder on your behalf. Once you've created an account and deposited the required amount of money in order to qualify for one of the offers on that page, step 3 is to simply contact 8cap and or A1 Trading's team. On that page, there will be information for that. And then we will be able to essentially grant you access to our tools completely free, bought and paid for by your new brokerage, 8cap. Unfortunately, 8cap does not accept US traders. However, if you're outside of the US and interested in exploring this offer in more detail, again, like I said, we'll have that link in the live stream chat or in the description down below. Alternatively, you can just head over to a1trading.com/8cap. Thanks to 8cap for sponsoring today's show. Now back to the content.
Good morning, everybody. Welcome back. Hope you're doing well. Happy Thursday to you. I got to check, how did unemployment claims came in this morning? I was busy trying out some new gadgets for filming that I got. I got one of those handheld mics, these things. Let's see if I can show you. You know, where people hold up the mic and talk into it. So stay tuned on that. Unemployment claims came in this morning just slightly better than expected. 209K versus 210 expected. Philly Fed Manufacturing Index, a little bit softer here. Let's take a look. Yields are higher this morning. The 2-year yield is almost fully recovering its move yesterday. Dollar index in response is also higher, threatening that breakout that we've talked about here for a little bit across the 99.2 level. So we'll watch that. Let me reset my my drawing tool here so that I can draw some pretty pictures for us. But yeah, dollar index looks like it's trying here to get past this resistance point. And if you've watched this for a minute, if this breaks higher here, where that likely leads us is gold tumbling a little bit more. We did see gold making a down move this morning. It's still teetering on the same spot that we've been watching, this support level around 4,500. I wouldn't say that it's fully broken here by any means. We're still just chattering. But if you do see this type of move, if you take out those lows of yesterday, that very well could be a signal that gold has more technical downside here. If we take a look at the 4-hour chart, we've talked a lot about fundamentals here recently, but where that leads me here is I'm feeling still pretty bullish on the dollar, and dollar strength comes oftentimes at the cost of precious metals weakness. Yesterday, I had a long conversation with Chris Pulver, who comes on the show regularly. We talked about where that leads us to. By the way, what's up, Basso in the Twitch chat or Baso? Thank you for being here. We are streaming on Twitch, so nice to see someone is over there watching. Shout out you. Yeah. So anyways, precious metals, I've pointed out, I think that they continue to see a little bit of pressure in the here and now. I also talked about long-term thinking that, maybe there's an opportunity to start slowly dollar cost averaging back into precious metals. For me personally, I think that could be an interesting longer term play. Chris, if you've watched the show for a while, he talked about how pretty much through 2022 through 2023, he really was accumulating a lot of silver positioning. And that ultimately worked out really well for him. When you had the runaway move, silver absolutely blew out to the upside. For so long, it was like you could go buy physical silver for $27, $28 an ounce in physical store locations. And I did that myself. I have some physical silver that, I bought at the time, like $27, $28 per ounce. And it's kind of cool. It's trading at 75 now. At one point, it was 120. And I do think long term, you're looking at precious metals. Like I do think that the path of least resistance over the long term is for precious metals to move higher. But why am I kind of pessimistic on them in the here and now? Well, the reason is because you still have the inflation story coming back full swing. And initially, how I think that impacts precious metals is negatively. If you have rates that start to move higher, it is, 101, historically speaking, that's precious metals bearish. Like part of the reason we've had such a good run up in precious metals has been the story of inflation's cooling off, central banks can finally cut interest rates, and now we're losing that story again with the whole Strait of Hormuz stuff. Oil's up today, 1.9%. I continue to think that oil is probably the most important chart because it's connected to everything right now. And I'm curious if you guys could share in the chat, what do you trade most? Do you trade currency pairs most? Do you trade commodities most? Gold, silver, oil? Do you trade Nasdaq, S&P? What do you guys trade? I'm just curious. I think that regardless of what you trade, what we cover on this channel, I think really well, between myself and all of our wonderful guests that host on this show, we talk about macro. We trade all of it. Like we look at all of this stuff and we try and decipher, how does a blowout in oil prices impact gold, NQ, euro dollar? Because they all move together, right? They're all connected by macro fundamentals. So you might come onto a stream and be like, I'm trading the Euro CAD, and we don't talk about Euro CAD for the day, but you can still hopefully get the insights from listening to our thoughts on oil, listening to thoughts on, central bank policy, etc. Currency pairs mainly, indices, gold, only EU. Okay. Gold and US 30. Fair enough. So, yeah, Iran Supreme Leader says uranium must stay in Iran. Another drama added to the show. It's a rotating wheel of headlines back and forth. And I think that, you can kind of just look at, you can stare at the headlines, but then almost it's like, maybe just look at oil and you can kind of see what the headlines are really saying without even reading them, right? Right now, there is still a stalemate. It doesn't matter what the headlines say. It doesn't matter what the White House says, Iran says. Right now, what the market is betting on is it's neither massively escalating right now or massively de-escalating, despite what the headlines say, right? The price action will tell you a lot. And one thing that I think that the price action reading the tape here is telling us, and I'll maintain my positioning until proven otherwise, inflation is on the rise because what the market seems to be showing us is that while oil is not necessarily blowing out to $125 a barrel right now, do you know what it's doing? It's not moving lower right now. It's staying put here. And where that takes you, whether you're a currency trader, commodities trader, bonds trader, whatever you trade, I think the most important chart in the world, I've said it for a long time, is the 10-year yield. Because this is ultimately at the center of economic growth, inflation, interest rates, risk sentiment. This chart kind of tells you a lot of stuff. And if you can learn how to read this, if you're a currency trader, this is for you. If you're a commodities trader, this is for you. If you trade the Nasdaq, if you trade the S&P, if you trade the Dow, this is for you. This one chart connects everyone because it's so important. So inflation being sticky, oil prices remaining elevated is causing inflation expectations and probabilities for a rate hike to go up. And so this chart is sort of reflecting that. And right now, drop it down to a 4-hour chart, we did get a little bit of a retracement in yields, but notice how on the 4-hour chart, we're finding support here. Now, the other one is you can look at the dollar, right? Dollar index, you'll see very often moves in tandem with the 10-year or the 2-year. The one chart to rule them all. Sluggy's got it. Yes, it's the one ring of currency trading or commodity trading or whatever. It's the one ring of markets. But anyways, the dollar here is threatening a move higher. I think yields are attached here to this story, and very important that we continue to stay monitoring that. My thought process is yields base case. I start my analysis and I say, all right, what's the macro telling me right now? And if I go to US dollar, I feel like this is a pretty good indicator of it, which is let's do a little bit of an update. How are we looking on economic growth? Economic growth, it's not so hot. Specifically, it's not that the economy is crashing per se, but it's not beating expectations for the US. Like GDP growth, lower than expected. We had a downward surprise here. Manufacturing PMIs and services PMIs missed expectations, a little softer on the outlook for US economy. Consumer confidence, we'll get new data in a couple, I think, is it this week or next week? We'll get new consumer confidence numbers. That'll be very interesting. Last time they surprised positively, so I'm curious to see how that comes in. Inflation, though, is at the core of kind of where my concern is. Inflation is uptrending. Like, follow the trend here. Inflation's uptrending. CPI, PPI, by the way, also in other places for PPI, specifically Japan, PPI rose. The 2-year yield is rising. Like, let's just follow the trend here. Inflation is trending up right now. So, very important. Nick, don't yields react to oil prices? So that's a good point. That's a good point. Yes, they do. However, yields also reflect to a lot of things. They reflect to geopolitical sentiment. So does oil, but oil can be jumpy in both directions on stuff. Anyways, they're both important. Oil is a really important chart. I think that they move together. They're an input to yields for sure. Anyways, the jobs market data, NFP was stronger than expected. So that's a positive surprise. Weekly jobless claims, we just got this number came in. EdgeFinder updated here. We can see 209 versus 210 expected. It's fine. That's slightly better than expected. JOLTS job openings, slightly better than expected. ADP, slightly worse than expected. So all in all, we get a fundamental macro score. And by the way, this is the utility of EdgeFinder. All of this stuff just got auto-calculated. That's, again, when I started out in macro fundamentals, it was like, is there a tool out there that can just monitor all of it and tell me how data is coming in? We do this manually for educational purposes. And I also think even though I have mentioned, like, when I'm on vacation, I don't necessarily have to go line by line. I can just look at the overall summary of EdgeFinder, and that helps me to spot biases and analysis. But yes, I think it's very, very useful. I hope it's useful to you guys as well when we go line by line like this to understand how EdgeFinder is scoring it, because EdgeFinder is really just a macro screener, right? At the end of the day, it's a macro and sentiment screener. So I think it is useful to go line by line like this and get an understanding of what EdgeFinder is actually seeing and thinking. So when we look at dollar inflation, and we've also categorized it into kind of subgroups to make it easy to summarize. Jobs market is giving us a slight bullish lean. Inflation's giving a very bullish lean for dollar, and economic growth is giving a very bearish reading. The summary ekes out a positive fundamental macro score for dollar. If you're an EdgeFinder user, select your favorite thing, right? We also have one for Forex currency pairs. But we also have the indices for currencies. That was a big add that we added either end of last year or this year, but you can select Canadian dollar, the yen, you can select the euro, the pound, and look at it from an indexed level as well to get a focus not on a currency pair, but on a particular currency. So yeah, Nick, how is the technical score +3 for dollar? Sure. So seasonality, positive, that's a +1 score. And 4-hour and daily chart trend is a 2 factor. So it's a +2. So that's +3. So dollar index, right? is in a nice 4-hour upward trend. We are threatening a possible breakout here back to fresh highs. I think this chart looks really good. These are the sorts of charts that I personally really like to trade. I love when you get these sort of shallow retracements, buyers stepping right in there, and you're like, you've got like pressure. It's like a pressure cooker ready to go here to the upside for dollar. Now, that doesn't guarantee we're going higher. You never have guarantees on where markets are going next. All we as traders can do is make educated guesses. EdgeFinder is not a certainty tool. There's no crystal balls in trading. If you're looking for crystal balls, you let me know if you find one. Because I certainly, wish I had one. It would be nice. But as traders, all we can do is we can make educated guesses. And using screeners like EdgeFinder help to tune in and understand what's happening in markets to build better insights. I should also mention, now is a really good chance to mention that our Memorial Day sale is happening right now between now and this weekend. If you're interested in getting access to EdgeFinder for 35% off, here is how you can take advantage of that special offer while it lasts. We'll drop a link in the live stream chat to where you can speak directly to a member of our support team about getting set up with a copy. We're also offering payment plans on EdgeFinder. This has been a growing popularity thing for a lot of our customers are taking us up on this offer. We are just fully leaning in and offering this to people because this is what people want. We've made it so that instead of paying the full price, you can just split it up into a 3-month plan. If that is something that you are interested in setting up, connect with a member of our team. The live stream chat has the link in it. You can also find that in the description of the live stream if you're watching this back at a later time, or you can just head over to our website, a1trading.com. And if you're not interested right now in purchasing, but you want to explore what EdgeFinder has to offer, head over to our website, a1trading.com, and go through our tutorial segment. We've built a full-blown, tutorial. We've got video courses. All of this is free access on our site. If you want to explore all the different features that EdgeFinder is looking at, monitoring, as well as showcasing for you to get better understanding of markets you're watching, this tool is built for currency pairs, commodities, and indices all in one spot. We also have other products, stock box, etc. If you want to explore our website, head over to a1trading.com. But yes, don't miss the sale. Memorial Day discount, 35% off on EdgeFinder, stock box, or VIP membership. So we will see where we go next with this. But yes, in terms of my positioning, I'm still long TBT and short TLT through puts. So I have puts on TLT, and I mentioned yesterday, discussed this in my video and on the live stream, that if we broke resistance here, then that's going to be the point at which I take some profits or take my profits off on my short bond position. But with dollar making a run back higher today, yields moving higher in tandem, for now we look safe. But basically, if we break, let me just put this on 84.09 or so, I'm going to close out my my put position. So let's see. It's a little different when you're doing puts because I don't have a stop loss per se, because when you're trading options, you're trading around the premiums. So it's not, I can't put a 84.09 stop loss on price. Instead, I just have the premium. If if we see price action move to that point, then I will close out of that position. Yeah. Good to see you, Duranto. Thank you for being here. Let's see. Let us see. Gold here down 1% now. Silver's down 1.45%. Oil 2.8%. Yeah, it is crazy how connected all that stuff is right now. I mean, it really is. To Lee's point about oil being most important chart, I would say, equal to, right? Oil and yields. The reason I say yields are kind of like the one chart to rule them all, we made that joke earlier. The reason I say that is because there are other times where oil doesn't move nearly as much or as central to the story. Like when geopolitics are really quiet, oil's kind of a boring thing to look at, but yields are still important to watch. So even when geopolitics go quiet, yields are still interesting because it's the multiplier effect of what people are willing to place on in terms of like valuing stocks. If yields are moving higher, it inherently, the mathematics of it, right? Higher yields mean borrowing is more expensive. That should typically drag valuations lower. It's not perfectly one-to-one, and there are times where yields can rise and stocks can rise. So it's not because there's multi reasons for why stocks go up and down. It's not just valuations, it's also earnings growth. Like there's so much to this stuff. And the sooner, I think one thing for traders who are like, this stuff sounds overwhelming when you get into the fundamentals. Most people shy away from fundamentals. Like if you're here every day and you're learning macro, if you're learning fundamentals, if you're trying to understand the story as to why charts are moving, I genuinely applaud that effort because I know how hard it is. Like it is so much easier if you're a retail trader. I used to do this a long time ago before I got into macro. It's very common to be like, yeah, I just need to watch the price action, because you're really like sort of like shying away from that is really hard sounding. And I don't want to acknowledge that markets are difficult. I think actually one of the most eye-opening things that a trader can do for themselves is to acknowledge the complexity of the market and to recognize that it's probably not as simple as just using a moving average crossover or a trend line. Sometimes I get people commenting that, and like, if that works for you, excellent. But I'll tell you, that never really worked for me. Like, I think most people here, I'm willing to guess that most of you guys here are probably like me in the sense that like I scrambled around for a few years watching so many videos about like this technical strategy, this price action pattern, this, and so that's where I think a lot of people who have done this for a long time kind of roll their eyes at like the idea of like a fair value gap being some sort of secret to the castle on how to trade like the markets. Like, don't you think with the amount of money people are pouring into markets and trying to approach the market, don't you think if it was as easy as a simple candlestick pattern, that people who are really, really well capitalized wouldn't find and exploit that edge to the point that it no longer exists? Like, maybe it's okay for us traders to acknowledge this thing is hard, it's complex, it's competitive, and I've got to earn my keep. The sooner you embrace that mentality rather than, oh, I just need to wait for a fair value gap or a moving average cross, or, I just need to look at this price action pattern. When that happens, I make money. Man, I'm telling you, after 10 years, that just sounds disrespectful to me. Like I hear that stuff and I'm like, bro, we have all got lots to learn. But I don't even know if those people have begun to recognize that they have stuff to learn. They think they've got it figured out because they've got a candlestick pattern. Like, again, I'm not trying to throw shade, because I recognize that some people have really simple technical systems. And by the way, my technical system is like by the books retail trading 101. Like I use the simplest technical analysis that you can possibly get. I think it's actually more than adequate to just stick with simple technicals. But I also layer on fundamental analysis to what I do, because I think that's where directional bias and riding real macro trends, to me, that makes a lot more sense than just a simple technical strategy. Now, I'm not a fan of bashing people who have a different system than my own, because I recognize that there are people who are trading different systems and doing perfectly fine for themselves. I am telling you that I think personally, for the vast majority of people, going through YouTube and watching simple, technical, profitable trading strategy videos all day long and wondering why they never actually end up making profit after watching all those videos and studying and trying them. First of all, I don't think they've actually taken the time to go back test those strategies, in which case you will find out that a lot of that stuff works in certain environments and certain times, but overall it's not this wildly profitable thing like you see in YouTube videos, right? Whereas I think a lot of people would benefit from actually taking the time to say, trading is hard as anything. It is really, really complex. It is really hard. And starting there, you will have a better foundation than the people who think it's really easy and I'm going to like, jump into a prop account next week because I just figured out the strategy from so-and-so on the internet and now everything's going to be, pina coladas, right? It's just harder than that. And I think embracing the grind of trading is a healthy mindset to start, right? Nothing worth having is really easy like that, right? So anyways, Nick, is it guaranteed that if I use 8cap, I'm going to get EdgeFinder for free? So Melissa, we have a special offer with 8cap. You can find it by heading over to a1trading.com. This is going to be a way better explanation than if I try and explain it here in 30 seconds on YouTube. Head over to this website. We'll drop the link. There it is. Okay. Go to this website link, scroll down. These are all the terms and conditions, criteria, etc. for the offer by 8cap to purchase our products. It's pretty slick. More people should be taking advantage of this because it's a win-win-win. Let me explain. If you like 8cap, if you're like, it's a regulated brokerage, I like what they offer, I'm outside of the US, and I have the willingness to deposit X amount into a new account with them, if you do that, they buy all of our stuff for you for free. So it's a win for us because you support us. Like our products get purchased by the brokerage for you. For you, you get a brokerage, a new account with them, as well as access to a bunch of our stuff for free if you follow the terms and conditions on this page. Just follow the steps on this. But again, take advantage of that. We've had people who like this is like $2,500, $3,000 worth of stuff that they just get for free. You should absolutely, if you like 8cap and you're like, yeah, I want to trade with them, or you already trade with them, create a new account and just do the deposit thing like that. It's just free game. Why not get a free copy of EdgeFinder with your sign up? Nick, loving the stock box. What's in the pipeline for adding more stocks? Yeah, Evan, we have a lot of stuff coming to stock box. I have one of the big things, so I'll just give you a little teaser. We are going to be adding, so we currently have the stock scorecard, which is like my favorite feature within Stockbox. We've got sector scorecards coming next. I am so pumped for that. So stay tuned on that. That will be great for, if you want to identify which sectors are potentially undervalued relative to their 3-year average valuations, how the fundamental macro, like it's going to have a macro score featured into it. We just have to build the UI, which takes us some time. And eventually, yes, we will add more stocks to the list. It's sort of an ongoing project, and we are a niche boutique team. So we work as fast as we can, but we have massive piles of projects. It's unbelievable. Like we never, ever, ever get closer to being done with projects because for every project that we complete with building our tools for traders, support conversations that we have with customers and all the different stuff that we're doing. For every project that we knock out, I think we build or we create 3 more for ourselves, which is awesome because the tools get better over time. But oh my gosh, it is never ending. I do want to see something really quick with the AAII Investor Sentiment Survey. The latest one came in more bearish. Interesting. 43.6% of market respondents feel bearish on the stock market looking 6 months out. Really interesting. That's actually not what I was expecting. I was expecting crowd sentiment to stay pretty bullish here. So we are seeing crowd sentiment stay kind of pessimistic on stocks. In fact, outweighing bullishness. So people thinking stocks may be coming lower, kind of interesting. What's the put call ratio telling us? Put call ratio is still middle ground. Crowd sentiment is neither here nor there, but does lean a little bit bullish here in terms of latest options flow. We did see a big surge in call volume. That doesn't surprise me yesterday, right? Yesterday was a big up day for stocks. So we saw May 20th, a huge call volume. By the way, we haven't even talked about it, but Nvidia earnings. This is we had Rockstar earnings from Nvidia. Stocks slightly lower today. A little confusing on the front of it, but one thing you have to understand about Nvidia, The reason it's a really typically a boring earnings mover is because what matters most to Nvidia? That its biggest customers continue to spend. By the time Nvidia earnings come out, we've heard from everybody. We've heard from Microsoft, Meta, Amazon, Google. Like, we've heard from all these companies. And so the stock has already moved higher because all those companies were like, we're going to spend into the heavens, right? CapEx spending from Magnificent Seven stocks is still huge. So Nvidia, by the time the earnings come out, everyone already knew the earnings were going to be monstrous. I think they said something. I haven't looked at the specifics of it. Let's see if we can actually, and then we're going to throw the show over to Miko. We have something that might be interesting here. Again, Nvidia just opened up here for the day. So if I go Nvidia, let's see, do we have? We do. Check this out. Okay, so this is the last thing I want to do, just because Nvidia is so important. If you trade Nasdaq, if you trade S&P, Nvidia is a huge weighting within those indices. So Nvidia's earnings report got a A in terms of the report card grade given by Stockbox. One sentence overview. Nvidia delivered another record quarter with revenue and earnings per share both topping expectations by mid-single digit percentages, driven overwhelmingly by data center strength, and paired it with upbeat commentary and higher forward guidance. So it was a good earnings report. And I think if you're an Nvidia shareholder, like if you own shares of Nvidia, this is kind of what you hope for. Like, as long as the stock doesn't drop hard, look, the gains are in the stock. Like, if you've been trading Nvidia, if you've been holding Nvidia, you got a nice little bump there from the March lows, 39, 40% from the lows. Not bad. So the stock has done really well. And so you're looking at this and you're saying, well, earnings came out, reiterated everything is as it should be here for Nvidia. That's a win. Like, even if the stock doesn't jump 10% on earnings, it's jumped 40% from the lows. Stock's done well. Anyways, up next, we have Miko Audu taking over the stream. Just as a reminder, guys, if you're interested in EdgeFinder or Stockbox, which is what I just pulled up a second ago, existing users, by the way, if you have EdgeFinder, if you want Stockbox, it comes at a super extra discount. For information on our Memorial Day sale on EdgeFinder, Stockbox, or our VIP group, make sure, take advantage of that sale. It's 35% off if you click the live stream link or the chat link that just was dropped in the live stream chat, or head over to our website, a1trading.com, to explore that special offer before it ends. Up next, we have Miko Audu just after this quick break, taking a look at some more technical setups. Don't go anywhere. If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
All right, guys, what is up? Hope everyone is doing well. Glad to be back. So as always, I'll go through a bunch of markets which I'm looking to trade or currently trading. I'll share some opinions, some thoughts, some opportunities I'm keeping an eye on. Of course, if there's any particular markets you are interested in, want me to take a look, or any specific timeframes as well, feel free to stick in the chat. More than happy to take a look. But yeah, I do have two positions, swing positions I'm holding at the moment. The oldest one out of them is US 30, which has been a little bit up and down to say the least. Hopped in this a few weeks ago, 3 weeks ago to be exact. And yeah, we've just been stalling, to be honest. And the logic getting into this position was we had a severely lagging US 30 compared to the Nasdaq, compared to the S&P. I've been expecting price to go and attack the all-time highs, which was still not quite, we haven't quite done that yet. The all-time highs around 5,400, 5,500 to be a bit more exact. Looking for price to go and attack the highs. That really was the idea before I looked to manage risk and then see how far we go. Maybe price reverses at that level, or maybe we break out, who knows. We could take a look at the Nasdaq and the S&P as well, because of course the dynamics is a little bit different with them, especially, well, yeah, both of them have been very, very bullish. I'm kind of expecting some larger pullbacks at some point. Maybe they'll happen this week, maybe next week, who knows. But of course, very, very exaggerated moves higher. And US 30 just been lagging so much behind. So been looking to try and capitalize on that catch up, not necessarily expecting something like this to happen on US 30, but to some degree expecting at least the all-time highs to be tested. So I'm still holding that position. My stop loss is still in the original place it was when I got into the position. I'm not really looking to trail anything too yet. I might look to close some of the trades before the end of the week, especially if we're still kind of back and forth, just because momentum is clearly dried up. But I will hold the position and see it through, whether we get the push to the all-time highs or we don't. The other position I do have is USD/JPY, which I took last week, which seems to be moving a lot better. I've been keeping a close eye on USD/JPY. I was actually very, very bullish a few weeks ago when we were trading around the highs here. I was looking for the breakout, the retest, and a continuation back to the high from, I think, 2024, was it? 2024 July. So that's still the area I'm looking for dollar yen to push in towards. I mean, of course, the yen has been weak against pretty much every currency. USD/JPY just looked the more attractive in terms of the technical analysis, in terms of where I can find a buying opportunity to get into the trade. And then, of course, we had that intervention a few weeks back, which for me was just already a massive opportunity to actually get into a trade, especially if we didn't go and break structure. You know, if this was a different situation, if momentum continued, persisted, and broke through these lows, that would be a different situation altogether. But of course, we can see that did not happen. So with price reclaiming support, managed to find an entry on the retest of that same level. Stops a little bit below, giving myself some room. And this really is the first major target of the trade. This is again where I'll probably look to take some positions off, but most definitely move risk from the trade. And then, of course, we'll see if we can get pushed back to the highs. So those are the only two positions I'm actually swinging at the moment. I'm interested in some shorts intraday on Euro, which I haven't found an opportunity to get involved just yet. We had a bit of a pullback yesterday with some news coming in, but yeah, not a big enough pullback for me to get a trade. I'm pretty bearish in Euro USD. I'm kind of looking for a push back to support this territory on the daily, 1.145. It looks, especially with the momentum we got currently, it looks like price kind of tried to shift bullish, failed, consolidated for a few days. Momentum is now breaking the opposite direction. So I'm essentially looking for us to return back to the level we came from. Now, something like this would look very, very nice if we could get a bigger pullback. Let's make sure we can all see that. That would be that would be something I'll be looking for, and then the continuation back to lows. If momentum really does pick up, I will look to adapt. I might try and find a pullback into structure now. We're starting to form some consistent lower highs here. Something like this could be of interest. I would prefer the larger pullback, but if the market is a bit too bearish and I'm seeing significant rejection there, I will give that an area. I'll give that area a go, and then potentially another stab if we do push higher. But yeah, I do like the shorts here on Euro USD. Hey, what's up, guys? Hope everyone is doing well. What's up, Bashi? Good to see you, my man. What's up, LFTJ? Hope you are doing good. Of course, any recommendations, any markets you guys are looking at, feel free to drop it in the chat. More than happy to take a look. Okay. Okay, 245. Yeah, we can take a look as well. I'll probably drop to a USD pair or something. What indicator is that on the turns? Oh, it's just a swing pivot indicator. It's just map lower lows and lower highs. What's the name of it? Yeah, it's this one, pivot HL. Yeah, just type swing pivots or pivot swing in TradingView in the indicator search bar. It will come up, and basically all it does, it just highlights swing highs and swing lows. It's not a leading indicator, so it's not gonna give you the signal for a higher high or higher low, but it will map out previous higher highs and higher lows. So it's not something that is going to be a predictor for you, but it's a nice kind of reference, so you don't have to kind of manually plot each high and each low of importance. It will kind of automatically calculate for you. So yeah. But yeah, I'll go through. Okay, I could take a look at the Japanese index as well. Pound USD shorts. Yeah, we could take a look. I mean, Pound USD is a very similar opportunity to Euro. In fact, maybe even Pound looks slightly better. JP 225. So yeah, even Pound looks slightly better. We can take a look at that in a moment. But yeah, the Japanese index still pointing up. So if that remains true, I do think just buys against the yen is still your best bet. This trend has been going on for quite a while. As long as the market's up, we're likely to see yen weakness. And I'm not really seeing much signs of it slowing down as well. Maybe we can get a larger pullback at some point. But unless something changes characteristically, lower highs start coming in, we break structure, or maybe some really aggressive bearish momentum, I would just keep looking to try and buy the higher lows. So yeah, if you're looking on the yen pairs, specifically if you're trend following, because of course day trading, there could be some short-term opportunities going against the yen weakness. But if you're just looking to keep it simple, especially if you're a trend follower, I think that's a really safe bet, especially in the world of currencies, because you don't really see persistent trends all that too often. So the yen is definitely something to take advantage of. But yeah, in terms of Pound USD, so the analysis with this one's pretty much the same as Euro. You can see this is the daily chart, the bigger picture of everything. We are still very, very flat. This is a lovely consolidation we've been in for the past few months for Pound, or even maybe up to a year now, something like that. And it looks to me that we've just failed. This bullish momentum we saw a few weeks ago has just failed, consolidated for a few weeks, and they've broken out pretty aggressively lower. So I'm looking for Pound to do something similar as Euro, return back to support. We've actually seen a better pullback on Pound as well. I'll probably look for either one more push for Pound, especially if you can come and test that area. That'd be very, very nice. And I like the way price is fading at the highs too. So that would be a very nice area for a short. We could be falling now, to be honest. We don't necessarily have to have that pullback, but that would be a nice area for a short. And in terms of risk reward, you'd be looking pretty good. If we can get an entry in this area, stop loss somewhere above, target 1, target 2 potentially, or you might have an intermediate target before that as well. But yeah, Pound USD shorts I'm pretty bearish on. I'm leaning towards USD strength right now, but I don't really have any kind of concrete bias with USD, in all honesty. It's more so what momentum is currently doing right now. If we take a look at the DXY very quickly, again, if we go to the daily chart, this is a lot of nonsense, to be honest. There's not a lot of consistency in terms of trend with the dollar. So until price manages to break out of this range, I'm going to keep my bias very, very short term, short and sweet. Yeah, mainly day trading, but there might be some opportunities for maybe an intra-week trade. With my USD JPY position, I'm not really looking to buy USD there. I'm also looking to sell the yen, and just technically dollar yen kind of gave me the better setup, especially in terms of risk reward as well. So USD JPY is kind of a slightly different situation, but it is another USD pair, I guess. But yeah, in terms of the DXY as well, it looks like we have kind of bottomed out here too, and price is now breaking some structure here too. So the next valuable area of resistance where sellers could be lurking would be up here, 100.5 or 0.250. So that's really the next area which I'm expecting price to be attracted to. But from then onwards, we could very much come right back down. Maybe we see a breakout. We'll comment on that as well. But to be honest, when price does eventually break out, USD will be a very attractive attractive currency to trade. Reason being, we've been in this range for months, I think coming up to a year actually, and I would expect to see a pretty sharp breakout and a pretty lengthy trend. Typically, the longer the breakout, the longer the consolidation, the bigger the breakout. And we could be seeing something maybe mimicking this move on the way back up. Maybe price gives us a big U-shape. Of course, there's a lot of speculation. We might not even break higher. We could still, of course, break lower. So let's not get too carried away. And that's really why I'm just keeping my analysis a bit more intra-week, intraday, because I don't want to be too predictive when the market's just range bound. But anyway, momentum has picked up recently, and if structure can sustain this, I do like the idea of more upside. If we break through this support level, I would lose that bullish bias pretty quickly for the USD at this point in time. When's the news coming out? Has it already come out? Looks like we're seeing some strength. Let me drop to like the 15-minute chart. Okay, so I'm assuming that's the reaction from the news there. Actually, no, that would close prior to the news. I mean, from a market standpoint, not really seen much. Okay, appreciate it, Bashi, for letting us know the results there. What's the name of the indicator of the price numbers? It's just pivot, a swing pivot, I think, something like that. Yeah, just type pivot, swing pivot in the indicator search tab. It will come up. I'm pretty sure it's probably the first, second indicator we see in the list. And again, just to reiterate with the indicator, it's not a leading indicator. It's not predicting higher highs or higher lows. It's mapping out prior highs and lows for you. So it's kind of like an automatic tool to map out swing highs and lows, so you don't really have to stress too much about mapping it out. But it's not going to predict the next high for us to short. So yeah, it would be nice if it did that, but that's not the case. Okay, so yes, we can take a look at GJ as well. Dollar CAD, sure thing, we can take a look at that. So GJ is interesting. It hasn't really picked up momentum. I mean, overall the trend is still alive, and when I mean the trend, I'm focusing purely on the higher time frame, the daily chart. You know, we are still bullish. Market structure hasn't broken yet. I mean, I would be expecting a larger pullback at some point. You know, taking out a massive swing high like this, I do think we'll see a pullback at some point. But again, we could still see a few weeks of upside, so you don't want to get too carried away with that and miss out on some nice buying opportunities. Over the past few weeks, a lot of consolidation. So really, I'll be very, very careful about operating inside of here, just because we're not really seeing any dominance from buyers or sellers. Of course, if you're looking for maybe some nice mean reversion opportunities, some range bound opportunities, you might find something at the extremes of the range, buying the lows, selling the highs. If you're looking for more direction based opportunity, I would wait to see if we can get a breakout to the upside, because that is a sign to say, okay, the lower time frames are reconfirming the direction of the higher time frame trend, especially if the breakout's quite impulsive as well. And then I would be looking at a push back to the highs here, which is 216.5. So yeah, pound yen I'll still be pretty bullish on. I'm across the board for the yen pairs. Some look better than others. Like I said, I'm currently long dollar yen, and that's not necessarily looking the best in terms of maybe likeliness to create new highs, but at the time when I did find an entry, it gave me the perfect kind of risk area to define my risk below, you know, pretty significant support. So I managed to hop into that one. This one I'm looking for a similar move back to resistance as well. Euro yen, I'm bullish on that one too, but again, I'm not really seeing an opportunity to really find a trade there. It's very similar price action to pound yen. So yeah, I'm being cautious on some of the other yen pairs until I see that kind of intraday momentum pick up. I'm not seeing opportunities there. In terms of dollar CAD, so USD CAD, coming to the week, I was looking for some more upside, and it looks as if we're seeing that USD strength is coming through. I talked about the retest of 1.37 there, but it looks like USD CAD is a bit too bullish to get that retest, and we'll see momentum pick up right now. But again, USD CAD, I'm not particularly a fan favorite of this market right now. I mean, we came back to some significant support. We've rejected that. I'm kind of looking at USD CAD as a ranging market. It's not textbook. You could probably argue that this could be the high of the range and treat that as a breakout. I wouldn't really disagree, to be honest. And again, you don't need to be perfect too. It's just a parameter of where the market is oscillating in between. So yeah, at the moment we're kind of pushing towards the midpoint of this range, the fair value. So maybe price takes a bit of a break and we get a bit of a retracement of this bullish leg. Would I be looking to try and short that? No. I mean, I wouldn't mind if we do come back to 1.37. I do think that's an area for a bounce. I wouldn't be looking for anything spectacular either. I wouldn't be looking for a push to the opposing side of the range. If we do get this opportunity, I'd probably just call it a day back at the high. We don't really have a lot of buyers in the market. You know, if you compare it to my long on USD JPY, you have naturally a lot of buyers in the market right now. So I can be a bit more aggressive with my take profits. You know, pushing it back to highs. Dollar CAD were quite flat, so I don't want to overstay my welcome, especially if I'm not buying at the extreme of the range. If I'm buying, you know, slightly further into the range, I want to make sure that I'm not being too greedy with my take profits there. So yeah, 1.37. I think that's still an area of interest. If we do get that retracement, it's a big maybe. If not, I don't see much else, to be honest, unless we eventually drift back to the opposing range extreme. Then yeah, there could be some shorts there too, but we'll probably still maybe a few days, few weeks maybe away from that. So I wouldn't get too it was a nice initial breakout there. I don't really trade breakouts. I'm always looking for the retest of structure, especially in FX. But yeah, a nice initial move, but I'm not seeing much at the moment. Does the pivot indicator need any special settings? No, not really. I set it to 20. Basically, the way the indicator works, it calculates the highest point of a candle from 20 candles to the left and 20 candles to the right, because I've set it at 20. So if you were to set that at like 5, for example, it will calculate the highest point from 5 candles to the left, 5 candles to the right. And it will give you a lot more swing points. So there's no perfect setting. I find 20 to be quite sensible. It's not too clustered, and it's not too lazy either. So I would recommend check out 20, but again, there's no magic setting for it. Okay, so we'll go through gold. I haven't mentioned gold yet. I can take a look at the Nasdaq as well. So yeah, in terms of gold, looking pretty bearish. I'm actually looking for gold to come back into support. It's interesting for gold because we're starting to form some lower highs now. You can see we've got one over there, we've got a second over there, we've got a third over there, and possibly a fourth one over there as well. So the market is showing us that, okay, the buyers are trying to push price back up again, but each time they try, they do worse than the prior attempt. So they're not achieving the same price as they once did. So I do think we're likely to come back into support to go and find some more buyers to try and have a more successful attempt, or even break through this area here as well, and then maybe start a new leg from there. So gold at the moment, I do see more downside. At the very least back to 4,400, 4,300. Nothing crazy, but I do think that's an opportunity, especially if we can have like a pullback into here. That would be very, very nice. This is what I was looking for at the start of this week, but I mean, for most of the week, it's been quite choppy there for gold. But let's say if we do get a much bigger retracement into structure here, I think that's a fantastic place to be looking for a short, getting some stop losses above some entries there, and you can see in terms of the risk to reward, it's looking pretty delightful there. Even just a push back to structure doesn't have to be a new low. But yeah, gold, I do like the downside. Now, we might not get this, of course. That's why I theoretically would be nice to get there, but we are finding it difficult to break past this structure as well. So if you're on the lower time frames, what you could be looking to do is have a stab at resistance here, maybe get some stops above this high, see how that goes. If that does fail, you take the stop loss there, and then potentially look for a second try once we come back to a more significant structure like this area here. And of course, as long as the risk reward is positive, you can take a loss, take a win, and you make back the loss and then some. So yeah, gold, I really like the downside. I see it as a very similar opportunity to euro, to pound shorts. Essentially, we're looking for that USD strength to come in. Excuse me. So my focus really is just on euro, but I do think gold's a similar trade. I do think pound shorts is a similar trade as well. So, you know, pick whichever market is looking the best to you, and probably focus on that one a little bit more. But yeah, gold I'm pretty bearish on, so keep an eye on some shorts, 45.60 and 46.80. In terms of the Nasdaq, so this one again has been very bullish. I've just been saying buy the dips until proven otherwise. We had another opportunity to buy the dip here as well. I mean, so far it's holding a structure. Don't get it twisted. Nasdaq is quite tired, and it looks like it's probably on its last legs at some point. You know, I would be expecting a retracement here, but from my trading experience, especially when things are, you know, in some really strong trends, you know, just keep buying the dips until you basically take a stop loss, or until structure breaks really, because who knows, we could still see another week's worth of upside, and that could be a very nice trade to take. So until we see structure being invalidated, I'll keep looking to buy the dips. I mean, yes, we are looking tired. Maybe if we start fading at highs here, that could be interesting, because that'll be the first time we're fading at highs. But yeah, I quite like the buys. Yeah, I would say if 28,600 goes, that's when I'll pause that bullish bias. I mean, I would still be bullish overall. I just would expect to see a bit more retracement before we return bullish. So yeah, Nasdaq, in terms of an opportunity, I would say if we come back and retest that structure, especially if you can get a stop loss below this area. Actually, what would be very nice, which may not happen, if price could push towards this area, maybe even spike through and then quickly reclaim it. That would be a nice entry, and if a stop loss below there as well, that would be a very nice timing. And then from there, hopefully we can get the continuation. So that would be the area which I would focus on. Maybe some entries on like an hour chart, maybe a full hour if you want to be a bit more patient. But yeah, keep it very simple, back to highs, maybe trail some stops beyond that as well. So yeah, overall Nasdaq still pretty bullish until this level breaks. Yeah, and I'm just going to sit on US 32, which overall, I still do think we can get a pushback to the all-time high, but whether we'll get anything more than that, I'm not too sure. But to be honest, if we can just get back to the high, I'll allow myself to remove risk, so I'll move this to break even, take some partials, and we'll see where price goes from there. The thing about indices is that they don't always move clean. They don't always kind of just fly to the upside as soon as you get into the trade. Sometimes there could be a period of consolidation, and then, you know, the next 2 weeks you see a very convincing trend. So you want to make sure you're in the trade for that opportunity if it is to happen. But anyway, guys, we have come up to the end of my segment. I do appreciate Nick and the team for allow me on here. So I do really appreciate that. I hope you guys have found the analysis useful. If that's the case, make sure you do check out my channel where I do similar content there as well. But guys, appreciate it. Have a great day. I'll catch you on the next one. Take care.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Good afternoon, wherever you guys are watching in the world. I hope you guys are doing okay today. Hope you're doing well. Let's go ahead and get started here with what's going on. I was actually listening to Miko's analysis there, and I have a similar idea there when it comes to USD CAD. So this is one that I've articulated that I've been wanting to participate in, which is USD CAD to the long side. And we now have, if I look at the EdgeFinder here, we do have a bullish reading of +6 there for USD CAD. It's actually one of the only bullish pairs there, or actually the only bullish pair on Forex there that we're getting for currencies there. So good to see that. I'm looking to go ahead and participate in that. We were at this level, the top end of this resistance level that I have here marked up. We got there briefly, right where that 20-day moving average is at, and then we have shot up since then. So unfortunately, I didn't get the pullback that I was looking for, but I still want to participate on this pair. So let's actually go ahead and talk about this, because this happens to me quite often, and it's really good to understand, right? You know, usually if you have a trade idea and you want to enter the market, and you see that the price has now left the station, as you will, you know, naturally you would want to participate by just putting a market order in and catching the wave to the upside, right? However, I think it's really important that we practice patience. So although dollar CAD did trade into this level here and is now shooting up higher, there's always that possibility that something can happen to allow a pullback, right? So what I'm looking for specifically here is a pullback in dollar CAD. I just have a Fibonacci from the low all the way to the high. And then the 38.2 lines up right here at 1.37, which I think Miko is also eyeing that target as well. So fantastic to see that. So I'll pull back into this level here. And if you just look before, this was resistance at one point, right? So if we were to get a pullback here and you actually do find some buyers and this turns into support, you kind of get the best of both worlds, where you get the break and retest, this solidifies that support, and then you also have the Fibonacci level right there of the 38.2 lining up. So that's kind of what I'm looking at. So unfortunately, dollar CAD has left the station here. But you never know, right? You never know if we get another good wave of positive headlines in the Middle East and you get some dollar softness there as the safe haven gets priced out of it. Lots of things can happen, right? So good to know. It's kind of what I'm eyeing there for dollar CAD. Don't really intend to put any other positions beside that one. The other one that I may look to do, which I'm hesitant on because EdgeFinder does not have a bearish reading on it yet, which it's going to be euro dollar. Where is euro dollar? It's getting a neutral reading of -2 there, so not getting the reading that I want. But with this one, it would be some kind of a similar situation where the price has now broken out of this level, right? The great breakout, and now I'm waiting for a retest into this level here, so this can turn into resistance. And then from a Fibonacci perspective, if I just put this from the high to the low, the 38.2 would be towards the top end of this zone here. So that's kind of what I'm eyeing there for a euro dollar. And 38.2 also lines up right there with that 20-day moving average. So in fact, I'm going to put an alert right here for euro dollar, and then hopefully we can be patient and we get the pullback that we need, and I'll participate with this one to the short side. I am lined up there with the thesis that, you know, dollar to the upside. You do have some inflation worries there, and the Fed is likely to go ahead and hike rates. It's probably going to be one of the more aggressive ones in doing that. So you also do have some pretty okay fundamentals underneath the US that's kind of keeping it propped up as well. When it comes to the real yield advantage, it also is one of the better ones. In fact, I think it's number 1. So if I go to Eco Surprise Index, oops, wrong one. If I go to economic strength, yeah, dollar is the bullish one there. So it has the highest one. So I like to see that. So yeah, dollar to the upside is kind of what I'm aiming for there. There's 2 ways I can approach it. break and retest of 99.5 or just a pullback. Ideally, I get the pullback just so I have more to capture there from a risk to reward perspective, but that's kind of what I'm looking at for dollar CAD, euro dollar, all that good stuff. As far as my Aussie basket positions goes, we are still in profit there. So yesterday you did get a pickup in risk when it comes to the Aussie, and so Aussie CAD is doing well now. We have retested this level. In fact, I like to see that this is a solid level of support. We've reacted to it twice now. First, when I initially got into it, then we traded up here. I was targeting parity, and then we pulled back into this level here. Also, where that 20-day moving average is acting as dynamic support, and this was also some solid support there as well. So I like to see that. In fact, probably after the stream here, I'm going to move this one to break even. That way I can just ride this trend to the upside there. Aussie Swiss, similar situation as well, hold strong level of support. And Aussie Kiwi is the one that's lagging behind a little bit, but it is acting as dynamic support right there on the 20-day moving average. So I like to see that as well. For metals, metals are now getting to my area of interest. So I've talked about this many times here. Gold, right, fan favorite for the community, has been pressured under higher yields, inflation worries, the higher price of oil, and a stronger dollar. So what I'm looking for is that a level of 4,400 to 4,200. That's solid. You know, this is a wide range of $200 an ounce, but I think it's a solid level of support. This was once resistance, turned support on this big drop here once, twice. 200-day moving average as well was right there, and now the 200-day moving average lines up right here with 4,400. So from my understanding, things in the Middle East have been improving, but again, take that with a grain of salt, just because things have been so back and forth lately that you can't really put too much weight on what's being said there. But from the most part, it seems like the market is taking it that way. So you do have, well, oil's up 2% today. So I guess not, right? Yields are higher today. The short end of the curve, 2 years up 1.2. I would say yields are still elevated. Again, I was talking with Marco, but I really wouldn't know at this point what a resolution would look like. But for the most part, you are getting the technicals lining up there for gold. Now, from a fundamental perspective, let's see where it lies when it comes to the top setups page. Let's see here, gold. I think it was bullish briefly. It may have changed though. Let's see, I'm just going to type in gold right here. So now it's getting a neutral rating of -1. So the rating has gone down a little bit there. So we'll see what happens, right? I think this level of support here is a good one. And of course, if price gets to that level, or when it does, we can reevaluate what the fundamental looks like. But I think that it's going to be one of those make or break situations, right? Let's say gold gets to 4,400 there and the fundamentals start to tilt in favor of gold. So you see lower yields, the price of oil going down, maybe get some softer dollar, right? If that were to be the case, then gold can be setting up for a good. However, if you, for some reason, if the pattern continues where you get positive headlines, but then it's walked back, and you have no resolution in the Middle East, yields stay sticky and they stay higher, then this could also be a breakout point for gold to the downside, right? You have the strong level of support that has acted well in the past. You have the 200-day moving average. And if you were to get a flush below that, then maybe this is the opposite end of the spectrum that we're looking for versus, a strong gold. Maybe we get a very weak gold, right? It starts to fall apart. Maybe that turns into a sell everything, right? Equities have been very sensitive up here. Some could say that they are overstretched. So maybe that is the catalyst, right? Higher yields stay sticky, no resolution, and you get to sell everything. And with that would be gold as well, following suit with that to the downside. So that's kind of one of the things that I'm looking at for gold. I think it's a good area of interest there, 4,400, where you can take a risk to find stab at it. However, there is possible downside risk. So something to be aware of. When it comes to equities, we had some, I think, Nvidia beat, right? If I'm not mistaken, Nvidia did well on both fronts. So let's see what that's looking like. It's okay. It's green on the day. Yeah, I mean, equity markets are, I would say, some would say overstretched. I kind of agree with that as well, especially when you consider that the yield environment that we're in right now, where you have higher yields, sticky up there, and a strong dollar as well. Equities are still up there. So yeah, nothing much I can really say here besides wait for a meaningful pullback. Buying up here is a very risky thing to do. It's a very big gamble, but You have all the downside below, and upside you can't really measure, because if you look left on the chart, there's nothing that you can reference. So we are basically at all-time highs. So this is the tricky part about being at all-time highs, especially in this environment as well. Good morning, Bashi. Hope you're doing well, or good afternoon for you over there in the UK. Hey, Sluggy. Hey, Cycling Club. Hope you're doing as well. Simo said, Alan, you saw the new headline again. I think you're referring to this one, maybe something. Yeah, I mean, it's been back and forth. I think the first one this morning was something about Iran wants to keep the uranium in house, and then someone said that that's not the case. So it's really up in the air, man. I really wouldn't know how to solidify a ceasefire or end to the war, to be honest with you. In fact, I would like to know your guys' thoughts and comments there in the chat. What would a ceasefire look in your eyes? So what would the end to the war look like? Like, is there a specific headline? Is there a specific something that you're looking for? I would like to know. Me personally, I would probably just revert to price action. The price action will pretty much tell me what's going on. Ping pong type of environment. Yeah, of course, man. Of course. Bashi said, this is why I follow Iranian diplomats only. Okay, fair enough. Let's see right here. Pound Swiss. Pound Swiss seems to be a bearish pair from my understanding. We checked on it yesterday. Oh, actually, let's see. Pound Swiss. I think this is the one where I said you should probably wait for a bigger bump in the pound. Let's see. Pound Swiss. Bearish reading of -7. So love to see that. Yeah, I said basically off of this one, wait, right? I would wait for higher prices, maybe right here, that 200-day moving average, or up or over here in the red zone, this resistance level. I would wait for that pullback. But for now, it seems like it's been kind of hanging out here for 2 days now, stalling out. So I wouldn't really be interested in shorting right at this level at the moment. Cat Swiss. Yeah, let's look at Cat Swiss. Let's look at the EdgeFinder first. I'm just going to type it here to make it efficient. Cat Swiss is getting a bearish reading of -6. Okay, let's go ahead and look at that. The Canadian dollar basket is pretty weak overall, and I would assume the same case is with the Swiss franc as well. Similar price action actually to Pound Swiss, where if you measure this out here, or you just put a zone here, I would say this is support somewhere around here, and you are in the midpoint of the level. So I would actually wait for better prices as well, similar to Pound Swiss. So you are in the middle here. You are at the 200-day moving average. If you were to get a pop above here, I think that would be great to go ahead and short at some premium levels. But I'm just not a fan of trading in the middle of the zone, to be honest with you guys. I guess I don't know if you guys get that pattern or not, but I just don't like to do that. I would rather wait for a pullback, even if it means sitting out for the trade. That's kind of my process there. Bashi says the markets don't even know what's going on. Flip a coin. Yeah, man. Honestly. Sluggy says the bond market will tell me. I agree with you there. Yeah, bond market will tell you. I'll be watching yields and oil. It's pretty much the assets that I would look for to kind of get a sense, a temperature check as to where the market's at right now or how they're feeling. Thanks for the stream. Yeah, no problem, man. Of course. Copper. How's copper doing? Copper's been very volatile. It's been doing okay though. Let's look at from a fundamental perspective what copper is looking like. Copper getting a -4 reading. Okay, so it's neutral. One of the only metals that's actually performing quite well. So if I were to, what's getting a neutral reading of -4, so it's kind of tilting in the direction of bearishness. But honestly, if I were to find some support right over here or somewhere within right here, I think that's pretty strong. Those are my levels that I have on copper. So if you want to take a screenshot, pause the video, whatever, that's kind of where I find some extreme values. Right here would be okay at 6, or 5.2 would be the best preferred value. It also lines up right near that 200-day moving average as well. So that's kind of my thesis, copper to the upside. Oil has been annoyingly just sitting there for how many days has it been now? In this typical area for about 16 days. So it's really been doing nothing much there. This 20-day moving average is or 50-day moving average is acting as some support. But yeah, oil is just kind of sticky there, not doing anything. And that's kind of the general consensus as well as to like where the market stands or where the world stands as to what's going on in the Middle East. We really don't know, right? So it kind of makes a lot of sense that oil is just hanging out there doing nothing much. Let's see, any more other suggestions here that we have from the chat before Marco goes ahead and joins me here. Max is in dollar CAD. Whoa, congratulations, Max. You beat me to it. Hey, Marco.
Hello. How are you
How are you,
doing?
man? Pretty good.
I'm pretty well. You're good as well?
Pretty good, yeah, of course.
Okay, nice. Max is in dollar CAD.
I just learned Max is always in it, man. Max
Yeah,
is doing phenomenal.
absolutely. Did it go near your level?
It was trading towards the upper end of it yesterday, you could say, like for a brief period of time.
Okay.
But yeah, you can see the chart, right? It's moving away.
Yeah.
But I was basically telling the stream earlier, right when I joined, that similar to Miko actually as well. He has 1.37 as he's eyeing. I'm not gonna chase the price. I'm just gonna wait for a retracement if we do get it. So it's kind of my thought process there.
Yeah. I think that makes sense. Although it's starting to run away from the level. So the main theory behind it was getting a pullback to that same level, but before this explosion up, and now it's continuing even more. Do you think there's still some steam left for the dollar to go up?
I think
without
so.
the pullback?
Yeah, I think if nothing changes, right? Like if you were to continue to see no progress in the Middle East and yield still higher, like Nick was saying that the dollar index has a 75 to 80% correlation to yields, the 10-year yield, right? And so that's kind of where I'm looking at as well, to get a temperature check as to where the market lies as far as resolution or not, or where the Fed's heading. So I think that, yeah, if yields stay sticky right where they're at right now, or if they continue to trend higher, then dollar index definitely has some more, room to go. Another thing though that could happen, that I'm kind of eyeing is, and this is nothing new, right? So this is, take this one with a grain of salt, but you are seeing some kind of positive direction when it comes to what's going on in the Middle East. I think it's getting dragged, and what makes this what makes this different from the other times, right? Because this has been happening many times, but the president does seem to react to the bond market, and the bond market is starting to snap. So now that yields are in a dangerous zone where the Fed has no excuse to really cut rates, right? They have to either hike rates or stay put. I think the president would listen to that rather than some volatility in the equity market, because prior we were getting some volatility in the equity market, but yields were still somewhat tamed. Now we're starting to see the opposite of that. So maybe this can cause a little bit of, I guess you can say, a pullout in the Middle East. And if you were to see that, then the dollar does get softer, I would say, my opinion. And then you can get the pullback that we're looking for in things like dollar CAD or euro dollar short. Because I do think that in the longer term, mid to long term, I think that the dollar still prevails.
Yeah, I think out of all of the presidents, the current one is the most impacted by the financial markets. So I think last time during tariffs, I think the bond market was the thing that made him do the 90-day pause and then basically backtrack on everything that he said. So you're thinking the same thing happens this time as well?
Yeah, and also to add another layer, and this is something that you've mentioned before, midterms, right? Midterms is very important, and we are in that area. So I think that even gives him more pressure to be responsible in that sense.
Yep, absolutely. And also, I have just seen some news about Elon Musk on your screen there, and I wanted to mention basically Elon Musk had the court case with OpenAI with Sam Altman. And if you guys don't know, it's super interesting. And if you're in finance, it's very fun to follow. Basically, I think 10 or 15 years ago, Musk gave OpenAI $50 million to kind of do an open AI or open artificial intelligence access. And then Sam Altman closed down the company, let's say, and he turned it into a for-profit company. So recently Musk sued Sam because those $50 million didn't go to an open source company, but actually a for-profit company. And they had a court case, and the case got thrown out. Basically, I think the reason was Musk waited for too long to make the appeal. So I think too many years have passed since the initial 50 million transaction. So the case has been thrown out, and it's super interesting. And of course, it's pretty important for artificial intelligence and for the whole future of the company. Did you see that?
I didn't see that actually. I was when you said Musk, my
Yeah.
brain went to the IPO, SpaceX.
That's true.
Yeah, and I think
Yep.
they filed today. So I don't know if they're
Yep.
listed already on the Nasdaq, but the ticker is going to be SPCX. Yeah, no data here yet, but they did do that. And I was actually going to ask you, right? SpaceX comes into play. I think it's evaluated in the 1 trillions. What do you think that's going to do to tech valuations? Like, is that going to artificially just keep boosting up the Nasdaq, and that makes us even more sensitive the higher we go? Like, that's another thing that's on top of mind as well, because I think there's going to be a lot of upfront euphoria, and like, you know, everyone's going to be excited about SpaceX. It's a new thing, right?
Yep.
We can call it the Mag 8s now. What do you think about that?
I think it's super interesting. I don't think it's gonna be kind of a massive. It's gonna have a massive impact on the NAS, but what it could have a massive impact on is Tesla, because we know with Tesla the valuations have been crazy high, and people are willing to buy just because of the Elon Musk factor. So because they believe in Musk, because they like his personality, because he is a genius, they keep on buying Tesla. Well, that could flip now to SpaceX. So the premium that Tesla used to have because of Elon Musk, that premium could now switch into SpaceX. So maybe Tesla will get sold off a little bit, and SpaceX will gain extra traction, because we know that Musk's first passion, his main project at the end of the day, is SpaceX. So he's going to invest most of his effort into SpaceX, I would at least deduce from like his biography and everything.
It makes a lot of sense. Yeah, it makes a lot of sense. And Tesla's too has already, I would say, is already established, right? Like it's already doing its thing. So you can kind of pivot away from it gracefully and go into SpaceX. Yeah, it makes a lot of sense.
And I think on most brokers and prop firms, actually, Tesla is tradable. So maybe selling Tesla could be a good opportunity. Again, I'm not an expert. I don't know anything about stocks, but that's at least how I'm seeing it, that the Elon Musk premium will flow out of Tesla and into SpaceX potentially.
Yeah, one thing we could look at to kind of help us in that sense would be the stock box. Let's go ahead and look at the stock box and see. I'm just curious where Tesla
we also need to
lies.
mention Nvidia after we go through SpaceX.
Let's look at Tesla. By the way, I always mention EdgeFinder. It's the tool I use, but also Stockbox is also a very good tool as well when it comes to equities and stuff like that. So this is a good one. It's getting a neutral score here, so nothing good, nothing bad. But again, it's not getting a strong score, so maybe that idea does get validated as, you know, the IPO comes in and there's a rotation out of Tesla maybe.
Absolutely. I've been using the Stockbox more and more, especially with the earnings from Nvidia. So those came out yesterday after the close, I believe. It was a beat. So you can actually view it in I think it's the earnings scanner, or let's see, earnings. Where did I find it?
That's a calendar.
I think it's financials scanner, actually.
Let's see. Nvidia. I love the UI in Stockbox.
Yeah, it's pretty cool. I'm just trying to find exactly which window I opened, because again, I'm a new user, so I need to find where everything is located.
Gotcha.
So let me see if it's in the financials summary or the earnings report. Okay, just a second here.
Yeah, man, dollar CAD's really moving away from me. It's unfortunate.
Yep. I know. So the stock box is loading on my screen. I'm gonna let it load and do its thing. We can continue. Anyway, so Nvidia earnings beat, but I think not by much. So the markets didn't have such a crazy reaction. And if you actually look into it, it's pretty tough to predict what Nvidia will do post earnings. Like they have beat earnings, I think 70 or 80% of the time in the last 2 years. I think that's the number. and it's completely unpredictable what the next day price action does. So this time it actually sold off. If you look at the daily close,
Yeah,
the daily close is negative,
and
while
it's
the earnings
getting
were a
sold
beat.
off today as well.
Yeah. So it's pretty tough to predict, and I would say tough to trade as well. Your edge is pretty minimal. What it does tell us is it tells us that the artificial intelligence sector is still pretty strong. So there's still a lot of capex, a lot of build outs happening, a lot of spending, possibly even increasing revenue from let's say, I don't know if you're using Claude, like for any of the more advanced Claude options, you need to become a paid member. So Anthropic is already getting a bunch of revenue from that. So yeah, I think that's a good story for the NAS, and I think we finish higher this year. And also, I would love to get a bit of a bigger correction, bigger pullback to, let's say, the 20 MA to buy.
That's kind of where I'm at as well. It's like, considering that you have a stronger dollar, higher yields, oil where it's at right now, it's not coming down. It's sticky at 100. That's gonna, there's some kind of a lagging effect as far as the input to inflation when you have higher price of oil. But all of those things would point at a lower equity market, and right now you're not getting that. So I think that there's possibility where the people that are patient really come out, as winners here. So I'd wait for a bigger pullback as well. I think that markets are kind of stubbornly high right now.
Yeah. And if you look at one interesting metric, which I will do a write-up in the A1 Discord, they call it the Shiller Cape ratio. I'm sure you heard about it. It's basically comparing earnings to price. And that ratio currently tells us that we are near the levels that were in the 2000s. So essentially, the market is highly, highly, highly overpriced compared to the earnings that these companies are getting. So essentially, people are betting that these companies will have 3x, 4x earnings in the next 10 to 20 years, but there's no guarantee. And right now, they're paying a massive premium. And usually, when the Cape Shiller ratio goes to, I think it's above 40, that's where it was in the 2000s. When it goes above 40, usually the upcoming decade is break even or negative. So usually there's very bad performance during the next decade. So it doesn't tell you when exactly the crash will happen, but it will tell you that in the next 1, 2, 3, 4 years, there's going to be a pullback. There's going to be probably a crash, and the performance after that will be pretty bad. Unless, of course, you can buy the dip. But if you just buy and hold, right now may not be the best time for like very, very long-term investments. I'm talking like 10, 20 years.
Yeah, so this was, I'm going to ask you this. This was a question that was asked yesterday. Nick and Chris had a conversation about it. Do you think there would be a 40 to 50% correction in 5 years from now?
I think so. Yep. Because I think this is the same thing as with the 2000s .com bubble. So you have a new technology, you have a bunch of companies pivoting to artificial intelligence. You have everyone in the world that's in finance wanting to participate in the massive artificial intelligence, let's say, revolution. So they're bidding up the stock market, and sooner or later there's going to be no buyers left, but the smart money will be selling their bags. Or you will get something in terms of geopolitics, or you will get something in terms of the Fed. So maybe aggressive hikes. Maybe the rate goes to, 7-8%, and that stops the rally, creates the crash. Depending on the amount of buying, I think 40% is definitely achievable. 50%, I think so as well. What do you think?
Yeah, I think 40% is actually, like, I would say, conservative.
Mm-hmm.
I
Okay.
think, you said, very achievable. I think 40 is a good one. 50, you're getting there, but I think 40% is definitely achievable, especially like Max or Sluggy. Sluggy brings a great point, right? You can think a bubble's about to pop, but it's only like halfway full, right? And Sluggy said a great point. .com bubble took 5 years for it to actually pop. So I say 40%. 40%. I'm not saying 40% from 29,115 where we're at right now, but maybe we are like up to like say we get to 32,000, and then 40% from there. What does that look like? All the way down to 19,000, which I think is not bad, right? I mean, it's bad, but I think it's realistic, is what I'm trying to say.
Yep. I feel like Robert Kiyosaki when we talk about these massive crashes. So
Yeah.
basically, that's what sells on the internet.
You have to take it. You have to be very, I wouldn't say careful, but it's very easy to become like a perma doomer, you know?
Yeah.
I'm kind of just like, I think it's possible. If it happens, it happens, and you know, we'll just survive for that, right? But
Absolutely.
Chris actually made a great point as well. It's lining up with the 100-year anniversary from the Great Depression. So
Okay.
you know, history or the world or time or what is it? Invisible string theory has a really great way at like making things happen. So
Yep.
yeah, 100-year anniversary. Maybe we get another one. Who knows?
Yeah, and you know what else was funny? So the writer is called, I think, Robert Sorkin, and he published the book that depicts the 1920 stock market crash. I think one of the biggest market crashes ever. And basically, when he published the book, he went to the New York Stock Exchange to ring the bell, you know, I think the opening bell. And essentially, that moment when he rang the bell was the exact time when the S&P peaked and then went into I think a 10% drawdown. So it happened like a couple of months ago, but that's pretty
Dang.
funny how it coincided with the exact top in the S&P. We now went to all-time highs, but it was pretty funny during the drawdown.
Yeah, it's like he says another point too. The VIX was throwing false signals as well. Yeah, man. Hopefully, you know, in those moments though, if you actually play it carefully and you're patient and you're not shooting from the hip, like a lot of wealth is really made in those moments. Like if you are there at
Absolutely.
the right time and you have cash on
Yeah.
hand. So in a selfish way, hopefully it happens and you know, we're responsible and we can take advantage of an opportunity like that.
I think Nick mentioned that his best dream is the stock market crashing.
Did he? Yeah, well,
Because then
I'm
you
on
can
the same
pick up
boat as
stocks
well.
for cheap. I would agree. I mean, the easiest market condition to trade is right when you find the bottom. So when the bottom is in, usually you get a nice rally back, at least back up, I think 10 to 15%, and that's kind of a no-brainer. You had it last time, it was after tariffs. So when Trump announced the 90-day pause, tariff pause, boom, explosion up. And also I wanted to show the Nvidia earnings they have loaded in the background. So let me just flip to
I would
my
say, man, I don't
screen.
even have to catch the bottom. If the market's down 50% and I can get it at 40, if I can catch the V recovery, I'm good with that, man. Like that's still like
Absolutely.
super really, really good.
Absolutely. So this is Nvidia. You can find this in your stock box, financial scanners, earnings report, and the last one. So surprise was around 5.54%. If I'm seeing this right, I think so. The EPS was 1.77 estimate, but the actual number came in at 1.87. So it keeps beating, definitely keeps beating the sort of the estimate. But the price action after that is completely unpredictable and very tough to trade. What is good is that the stocks still seems pretty strong and healthy. So the Nasdaq and the whole artificial intelligence story seems pretty healthy as well. Just wanted to mention that.
Yeah. The options market on the video was pricing in a 8 to 10% move in either direction. So it kind of
Okay.
just gives you that idea that, you know, they were expecting some choppiness, right? Not a
Yep.
definitive directional outcome, but yeah, man. Well, thank you for the great conversation. We'll talk tomorrow, Marco. I'll go ahead and
Absolutely.
pivot so you can do
Absolutely.
your giveaway, and
Sure.
we'll talk soon.
Yep. Thank you, Alan. This was very, very fun. I'm looking forward to tomorrow. And we have the Fed Waller speech tomorrow. So that should give us more clarity. Will the Fed be hawkish or stay more neutral? Yep. See you tomorrow. Goodbye.
All right, man. Take it easy.
I will mention the link to the giveaway. So if you want to participate in the DNA funded giveaway, the steps are these. So first you need to join the A1 free Discord. Okay, let me just move this. First, you need to join the A1 free Discord. I will post the link in the comment section. Okay, So join the Discord, and then in the Discord, you go to, sorry. In the Discord, you go to channel called giveaways. Then you will find another jot form. That one will enter you into the giveaway. Okay, it's going to be a 10K one phase DNA funded account. And by the way, if you want to get funded, code A1 Alive gets you 25% off any DNA funded challenge. Okay, so we have a code for you, A1 Live, 25% off. By the way, this is my personal 25K two-phase funded account. I'm down $630. So I took, what was it, a buy on the SPX. Actually, ChatGPT took a buy on the SPX and a sell on gold, and it didn't work out so well. So yeah, this challenge is purely traded by ChatGPT for testing purposes and for a challenge I'm doing on my YouTube channel. But as far as trading goes and trade execution, I've had a great experience so far. There's a big broker behind this company, and their support team is pretty quick to respond with quality solutions. So that's really important. Once you start trading prop firms, you will understand why you need a good support team, why you need a good platform for execution, which TradeLocker is the best one in my opinion, and why you need a diverse set of assets. So DNA, you can trade pretty much anything. You can even trade individual stocks, which is pretty cool. Okay, so watchlist time. What am I running for today? Pretty much the same thing as I did for most of the week. So it's a buy setup on gold. I believe this is a short-term bottom. I believe the demand is still there. China, central banks. I believe the weak hands have been shaken out, and huge wicks rejecting this area, which is an added bonus. I'm hedged, meaning I'm short Eurodollar, which is betting on a hawkish Fed, which is betting that the inflation persists and that the Fed needs to hike rates in the future or keep restrictive rates, right? So that's the bet on Eurodollar. It's working out well so far. I have the Nikkei and the Nasdaq. I'm not super happy to pull the trigger this week because I'm expecting risk off, but Nikkei is already at a good level. On the Nasdaq, I would like to see a bigger correction, a bigger pullback to the 20 MA, okay? So, looking for a pullback to the 20 MA on the Nas. I still think this is a bit overextended. I may be wrong, and this may fly without me, but I have to stick to the plan. And usually when I stick to the plan, I'm glad that I stuck to the plan because these kinds of moves, they have a correction sooner or later. You cannot get such a huge explosion with zero pullbacks, with zero corrections, and that it lasts forever. So sooner or later, you get a correction. That correction could bring us back to let's say, maybe even 28K. And that's where I will be looking for a potential buy setup. That's the game plan for now. Next week, I'm considering buying the Nikkei next week. So today is Thursday. We just have Friday. Tomorrow, let me just see the calendar as well. So as far as news goes, next week, we have some Aussie stuff. We have some New Zealand dollar stuff. Core PC price index. So that's inflation. Yeah, not much. So Nikkei is fine. Nikkei is fine. I would love to get a bullish reading on the EdgeFinder. So let's see, top setups. Nikkei. Neutral at the moment, so I'd love to get a bullish reading, but even if I don't, I'm considering buying the Nikkei. Let's do the giveaway now before I forget. So today is the 21st of May. Let me just copy all of the entries. 21st. Okay. Got the entries, go to the wheel, paste, spin, let's see. So it's gonna be a 10K one phase account, okay? Zaryab, you're the winner. Congrats. I have your contact information. And after my segment ends, I will send you the code for a free 10K one-phase account. So, yeah, make sure you are active on your email. Comments. Let's see. Hey guys, what do you think about this trade idea of buying VIX below 15 and holding it, collecting swaps? Well, I'm not sure how I would personally structure it, because on most of my brokers, the VIX is something I cannot really trade, and the swaps are probably not that great. Because I'm using CFD brokers, because I'm doing prop firms, you know, those guys are known for fixing the swaps so that the swaps are not really in your favor. So personally, it's not for me, but if you can have valid reasons for it, and so you want to be short volatility. You want to be long volatility. Okay, so you're betting on a crash. You're betting that that the stock market will not calmly continue going up. Interesting idea. Let's open up the VIX here. So you want to buy it below 15. It might work. It might work, especially if you get some good swaps. I think it's much better than being short volatility, because short volatility strategies, well, they face some crazy downside when it happens. You know, look at these explosions of the VIX. This was the last one, was the US and Iran stuff, and you can just get crushed if you short volatility. So if you can execute the idea and get positive swaps in a meaningful way, I think it's fine. OPEC Plus is likely to agree on an oil output quota hike of 188,000 barrels per day at the June 7th meeting. Interesting. So that's going to increase the supply. Sluggy says, Nikkei, I caught the bottom, but I hope we get a deeper pullback to 59110. 59110. I like that level as well. Yeah, I definitely like that level as well. It's a good support level. It's nice. It's nice. But congrats on catching the bottom. So that's a good entry as well. Marco, look at the GP NZD. GU looks good to the downside. Let's see, GU. Well, yeah, it's near the 20 MA, so it doesn't look bad. It doesn't look overextended. Although I'm already in the euro-dollar short, so I wouldn't really look to increase my exposure on GU, if that makes sense. But hey, if anyone is not, if you guys haven't sold the euro-dollar, selling the pound dollar is another fine play. You also have an added catalyst where the political situation in the UK is troublesome. So you have the Comrade Keir, Prime Minister. He's basically totally incompetent, and they want him to step down. And then they're arguing back and forth, which is creating a bearish pressure on the pound. So that's another good part about it. GBP NZD. I wouldn't really play long on the New Zealand dollar, because New Zealand dollar, you have a bunch of rate hikes priced in. If you look at the rate probability website, we go to, we don't have it here. Well, it's similar to the RBA, but Australia is actually producing good economic data, while the New Zealand has a bunch of hikes priced in, but their data is not so great. So I don't think they can afford hiking as much as the markets are pricing in. That's why I think there's going to be some bearish pressure on the New Zealand dollar in the upcoming few weeks. So I would rather do GU, or I would, of course, focus on the pound Aussie, but that one is probably running away. No, it actually looks fine. Looks close to the 20 MA. So I would prefer pound Aussie if you want to sell something. If you want to sell the pound against something. The best environment for gold in my thesis is a recession and cut narrative. Yeah, it is. Gold loves falling real yields. I think it does, yes. I'm short 50K on other space stocks ahead of listing. The thesis is that people will want to sell those names to buy SpaceX. Okay, I don't know anything about that, so I can't really speak on the topic, but that does sound interesting. And I have ran out of time. So I just want to repeat, if you guys are looking to get funded, today's sponsor is DNA Funded. And with the code A1Live, you get 25% off. Okay, so check them out. Don't go anywhere because you have James coming on right after me. I wish you guys all the best in the markets. I will see you tomorrow, and take a look at the speech from Fed Waller. Okay, it's gonna be an important one, so let's pay attention to that. Let's have a read through it. Thank you, and see you in the next one. Goodbye.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Hello, ladies and gentlemen. How's everyone doing? Happy Thursday. Hope you're all well. Okay, thoughts on Euro New Zealand for potential long cycling. We can have a look at that one. Question about the giveaways. I cannot answer that, unfortunately. Sluggy, good to see you, my friend. Hope you're well. Yeah, I'm doing fine. Thank you very much. So I'm still in the Nikkei long. We're not really seeing too much. We've had a little bit of a move. So yesterday when we spoke, this was pretty much an entry. I actually have a slightly better average price down here. Obviously, I took an initial entry where the entry is, and I scaled in towards this 200 moving average as well. So I've got a reasonable average price. So I'm sitting quite nicely, but I'm still looking, obviously, for a continuation to the upside, looking for these highs to break, and then these highs to break. So it's mainly just a case of just sitting and waiting. Pound New Zealand is continuing to run. We had a slight pullback overnight, early morning for me. Nothing too interesting. So yeah, overall, it's still a very positive position in terms of the setup, the technicals, development. It's all looking completely fine. So this one was really simple. Fib from the high all the way down to the low, pulled back into the fib zone along with previous structure over here on the left, and yeah, continuing to run lower. This isn't really an EdgeFinder trade. I'm not sure if the EdgeFinder's got Pound New Zealand, actually. It might do. Let me just double check. This one was taken off other research, basically just relying on my pound bearish idea. So Pound New Zealand isn't on here, but it's fine. It's more of a longer term trade, not just a standard swing trade that we often do see on the EdgeFinder. I did take a long position on copper. So this one, again, is very, very simple. Fib from the low of this bullish leg to the high, pulled back into the fib zone on the left, retested the previous all-time high or the previous high over here, and also previous structure. Had a really nice bullish candle close on the, was it yesterday's daily candle. So yeah, looking to get up, did get back in, not get back in, what am I talking about? I got in on copper. And then we've also got a position on soybeans, which I'm not going to show here because it is an entry, it's not my trade. So I will leave that one there, but we are long on soybeans. But yeah, that's pretty much it in terms of my open positions. I'm sitting pretty relaxed. James has got filled in that nice pullback on Pound New Zealand. Very nice, Sluggy. Well done. EF also agrees. Yeah, I swear yesterday we checked, but it seems to have disappeared. But it's fine. It's fine. So Pound Australian, we were looking at this yesterday and we were talking about how the 50 moving average was used as dynamic support here. And the most likely outcome was a move back to the upside, which we did get. However, we are also seeing Pound Australian not on the EdgeFinder. So it leads me to think that what I said yesterday could still happen, which is the case of we bounced off the 50 moving average. Now, what we often see when we're going from one trend into another trend, in this case, bearish to a bullish trend, we often see this type of behavior where we come up to the 200, test, and then use the 50 as a support. And then we sort of bounce in between and slowly develop this trend until we get these moving averages form. So I'm quite hesitant to get into pound Australian at the moment. I do think the fundamentals are still supportive. However, I'm just not really a fan of the technicals. So again, as we've been talking about, we're currently in this weekly level of support, and we have already had a really large move to the downside here. So I would expect a little bit more of a mean reversion to the upside, a larger pullback, and then potentially we could get short. I do still think the UK economy is in a very difficult spot, especially compared to Australia. So yeah, we'll see about this one, but it's not, I don't think it's great right now. The pound dollar, we were looking at this and I was saying I would go short. Unfortunately, I missed this. I did get an opportunity yesterday, but I just wasn't, I don't know, I'm just must not have been paying attention. But yeah, I wasn't in at this point, unfortunately. But I do think pound dollar could also have a pretty decent move to the downside. I made a video today on my channel basically talking about the Federal Reserve and my outlook on the US dollar and things. And it's, to be honest, I don't really have much of a bullish view on the dollar right now, but I do think there's relative strength between the UK and the US. So I still wouldn't mind being short pound dollar on a more short-term aspect, and then leave pound New Zealand to run over a longer period of time. The S&P is interesting. So I was watching this almost cross that we had on the S&P on these moving averages. We didn't get a full cross, and we have popped to the upside since. However, on the H4 here, we are starting to see a little bit of bearish price action. This is micro analysis, not super relevant, but we've obviously created a high, and we've now printed what looks like potentially a lower high. So if we can break below this 50 moving average, we can break below these previous lows as well. I think there is a case to potentially start positioning bearish on the S&P. I think that'll be very premature because I don't think the fundamentals really warrant that yet, but I do think there is the potential is coming. Now on gold, again, as I said in my video today, I do think gold has the potential to be a really good opportunity over the next couple of weeks for more of a multi-year trade, potentially a multi-month trade, depending on your personal time horizons and your desires from trading. But if we end up getting a situation where the ceasefire basically takes place, Trump's optimism or the optimism Trump created follows through, we can expect oil prices to come low. We can expect Straits of Hormuz to open up. We can expect inflation inflation expectations to start lowering as well, putting the Fed back in a position where maybe rate hikes aren't necessarily first port of call, which would then potentially position gold in an environment where it could start rallying again. Because we are seeing this sort of reflected on yields, or at least we were. So we can see long end yields here on the 10-year did obviously take that spike to the upside. They've gone range bound, and now we are starting to see downwards pressure on yields again. So if we can see yields continue to come lower, and we can see central banks start pivoting back to what their initial ideas were, I think this is quite a nice idea. Opinion on pound NOK. That's interesting. I have no idea about the NOK fundamentals. It's not a currency I trade, but we can definitely take a look at the market. For some reason, my mouse is playing up. Just bear with me for a second. Weird, whatever. So pound NOK, I mean, obviously a bearish market here on the daily. The weekly is looking terrible. What about the H4? H4 is bearish. H1 I would assume is bearish as well. So I don't think there's really much I could tell you here, because it's just a landslide to the downside. I think if you were looking to be a seller, which I hope you would be following the trend, maybe something, oh, hold on, my fib's disappeared. Fib from the high to the low. Let me just change the settings. So maybe something like this, just look for a pullback into this fib zone and then a continuation lower. There is also maybe a bit more of a longer term view here where we could see these previous daily lows, or actually weekly lows, get retested, pull back in towards this 200 moving average, and then a continuation lower. But of course, we're on a weekly time frame, so that's quite a long-term view. But yeah, I think shorts are pretty default here. You got your notifications turned on for the UFO video. Yeah, it should be interesting. We'll see. I appreciate the support though, Alan. James, are we looking for GU shorts as well? Yeah, I mean, as I said, I think pound dollar shorts make sense, but I don't really have a position on the dollar. I don't really have any interest in buying it or selling it right now. I'm kind of just waiting for further developments. Hasn't the dollar become a bit foggy? Yeah, that's exactly it, Sluggy. Yeah, Sluggy, that's basically what I was looking at, because I was thinking, we've had soft disclosure or whatever you want to call it, the files and things. I was like, you know what? It's not a small thing. I think what's happened is we've been drip fed things. It started with like films and conspiracy theories, and then we had government start looking into it, or at least being a bit more public about it. Then we've had the files drop, and this has been over the course of many, many years, like decades. So I think people could become like a little bit numb to the idea of like UFOs and all that type of thing. But realistically, let's say a UFO came down and they had, I don't know, like massive amounts of gold or silver or some part, they're using something that we view as scarce and valuable, and they've got an abundant amount of it. That our idea of a scarce precious metal might, completely deteriorate. Then what happens to the gold price, or generally what happens to the financial markets? Of course, I'm yapping a bit here, but that's kind of what I was thinking. So I was like, you know what, let me make a video on it and look into it. You think UFOs would be bullish for Nasdaq? Maybe. I was short on pound NOK. Let's have a look, because again, I don't really know anything about the Norwegian currency. So you were short. What price did you say? 12. 65586. Okay, that's a fantastic entry. Actually, that looks really, really nice. I'll be honest, and obviously this is from hindsight 2020 vision. This would have been a perfect trade to just trail stops on. I mean, this is one of those markets where if you manage to get into a trade and it starts running, there is no real reason to close it, because the higher time frame trends are so strong to the downside, and there's still a lot of room here on the left side that could be corrected. So I think looking for more positions is warranted. Again, I'm going off just the trend because I don't want to talk about fundamentals on a currency that I'm not overly familiar with. Let's see what Bitcoin's doing. Not too much, actually. So we were looking at the 200 here on the daily time frame. We're watching this sort of bounce, but we've not really paid any attention to it since. And it looks like we want to break lower or break below this 50 moving average, which could be interesting. I don't trade Bitcoin. It's not something I touch ever other than longer term. But I think what could happen here? I'll be honest, I have no idea. See, this could be one of two things. This either could be the revival of Bitcoin, and this is just a case of people taking profits. We see a pullback and continuation higher, very standard stuff. Or it could be a case of we've come into this previous level here. We've had this pullback because we were pretty oversold objectively on a weekly and daily time frame. Is this just a case of, oh, this was just a pullback and we're going to head lower? I think it's possible. Either case is possible. Again, I don't have any stake in Bitcoin, so do your own research. It's not a market I'm really involved with at all. ChatGPT says markets would probably panic first, then adapt. Defense, aerospace, AI, and gold could benefit the most from UFO revelations. Well, there you go, Shills. It depends on like the way it happens as well, which I also cover. Hoping Starmer quits. Yeah, I don't know. I think the UK situation there's a lot of problems. I mean, even you could argue, yes, Keir Starmer quitting could be a good thing, but then you've also got to look at like the logical side. Okay, Keir Starmer quits. Who's next? Who is, what's the other alternative? Oh, well, like Nigel Farage. Oh, fantastic. But then there's also the other side of like credibility. We've not had a prime minister stay in office for almost a decade. Not a single one has done the full term. You have Boris Johnson, Rishi Sunak, Liz Truss. I think I'm missing one, and now potentially Keir Starmer. So it's like, it's a joke. This country and the economy is an absolute mess, and I think the best way to deal with it is by selling the sterling and making money from the collapse of it. Here comes Bashi as soon as UFOs it comes up. Yeah, I think I'm one of those people. I'm really interested by like extraterrestrial and space and all that sort of stuff. I think it's really fascinating. Anyway, what else do we have to cover? I've got nothing long term. I was in silver, but I liquidated that for a very tiny loss. I think I lost like 0.2%. It was really nothing major. Nikkei, we've already looked at this, but I don't really think there's anything going on. It's very, very sideways at the moment. Pound New Zealand's looking good, but again, it's really just a case of can we get that push lower? Because we came into this 50 moving average once, we rejected, used this as support. We've now coming down again. We just need to see that kick to bring it lower, and that would be a pretty safe bet now that we can continue after that. Beyond that, what else is there? Pound Swiss is getting a bearish reading again, which is nice. I was looking at Pound Swiss, but I decided to sort of sideline it for a little while. And actually, it might be time where I could look to get in. The thing that puts me off is just the swaps. I sound like a broken record talking about this, but because obviously the Bank of England interest rates are 4.35, I think, off the top of my head. I can't remember. Let's just double check. Is it scanners? Yes, carry trade scanner. Let me just double check and verify that. Oh, 3.75. I was close. Really close enough. 3.75. And the S&P is obviously 0. So the swap rate is pretty nasty for short sellers. It's quite expensive to hold, which is just one of those things. It's just like, do I want to deal with that? I think it might be worth it, but I don't know. We'll see. However, if we look at the higher timeframes, it is looking really good to go short. It's very similar to pound NOK that we were looking at earlier. The higher timeframes are very, very bearish. We're seeing consistent selling pressure. Daily timeframe is looking wonderful, really, really nice. So again, really nice move to the downside. We've got the continuous rejections of these levels here. So I think, again, short positions are beneficial, but it's just a case of what I really want to avoid is sat in a position that just moves sideways for a while, because although the trade may remain healthy on paper, that whole time you're just paying swaps for no reason, when realistically you could actually just wait, sit out of that, and then get in a little bit later, and of course try and reduce that holding time to reduce the fees that you're going to sit through. So pessimistic? It's not, though. It's facts. I mean, it is pessimistic, I suppose, but what I said was it's true. We haven't had a prime minister do a full term in almost a decade. In fact, it might even be over a decade at this point. If he quits, do you think we'll get the same effects as Liz Truss? No, Liz Truss was a completely different thing. She had the mini budget, which was detrimental. So we don't have anything like that. So no, it wouldn't be a case of the pound collapses. It wouldn't be good. The pound would very likely lose value on that, but it wouldn't be a case of the pound collapses or, takes a massive hit. I think it would just be one of those. It would just be another chink in the armor of the UK, if it's got any left anyway. Yeah, as Bashi said, Liz Truss was a completely different ball game. Missing British Prime Minister. None of them are great. That's the thing. Yeah, I agree, Matthew. We're in a position where it's like we're in a vote of who is the least worst. We don't have an option of who's the best. It's just who is the least worst. And to be honest, I don't think there is one. It's really down to what your personal views are, which I'm not going to go into. But some people might go with one person because they believe one thing. Someone might go with another person because they want weed shops on the high street. But realistically, to actually fix the economy, fix the unemployment, fix the fact that students or graduates cannot get a job, none of them are going to fix that. These are detrimental issues that are in a foundational problem, or are a foundational problem that it's not just a fix with a new prime minister. Anyway, let's move on, because again, this is a topic I would rant about for hours if I had the opportunity to. So we'll move on and get back on topic. Gold, we've just discussed gold, but I do really like it, but not yet. I think gold is worth waiting for. I don't think it's worth trading right now, in my opinion. Silver is getting a bearish reading, so silver could also be quite a nice option to be a long-term accumulator of at these low prices, which is what I was doing. But as I said, I liquidated my position just because I wasn't super happy with the average price. I wanted to reposition a little bit and rebalance the portfolio. But I think if we can get silver to come back down into this daily low, which would be around 71. So what I might do is actually start building a ladder, or a bit more of a structured ladder than I did previously, similar to what I did last time during this rally over here. So I think it would be more a case of staggering a ladder order or a ladder position, ladder trade, whatever you want to call it. So it'd be something like this. So buying at incremental levels. So it could be, you know, $70, $65, $60, or it could be $70, $72, $74. Depends how much cash flow you have, or how much bankroll you have, etc., etc. But I think that would be one of the best options. And of course, not financial advice, but I think I like that the most, rather than just going in for one swing trade on silver. The US dollar is getting a bullish reading. So let's take a quick look. Is it under assets, or is it under, yeah, it'll be under Forex. Of course it would. Unless it's not, hold on. Actually, I don't know what I'm doing here. My brain's going blank. Let me just look at the US economic heat map. So the US is getting a score of 50%. NFP, to be honest, I just don't really like it. I think the fact that inflation has been coming out slightly more positive is obviously one of the biggest factors for the dollar right now. But as I said in my video this morning, I don't think that this is a long-term thing. It's not something I want to trade off, because I think it's more of a temporary issue, which again, I'm not going to go into here because I don't have the time right now. But yeah, I'm not really a fan of being the buyer of the dollar, or at least long-term. Euro yen is getting a bullish reading, which is nice. Let's have a look at that one. Never mind. I don't like this at all. I think traders are mainly watching dollar yen right now for 160. So where is 160? Let's mark that up. So this would be MOF. What would we call this? Sweet spot. Yeah, so 160, and we are approaching very quickly. So obviously we had the intervention. What have I been telling you guys? These interventions are not they're like a little plaster on the larger issue. US dollar is under asset scorecard. Oh, thank you, Trader Nick. Appreciate that. I'll take a look at that in a second. So, excuse me, dollar yen. What was I saying? Yes, it's more an opportunity. These situations where we get these interventions are more opportunities for investors to just buy low, because nothing's changed fundamentally. It's just, oh, the currency's lower or the pair's lower. Cool. They've not hiked rates. Nothing's happened. So this has recovered very quickly. Again, we're in line with the US dollar strength as well. The problem now is that if you weren't buying these levels, like I wasn't, in fairness, you've kind of missed the move. And we are, again, approaching 160 very quickly. Do you want to be a buyer at this level? You're braver man than me if that's the case. What do I think about CAD Swiss? So it's got a bearish reading. Let's see. CAD Swiss. I think we did look at CAD Swiss a few days ago. Yeah, higher time frames are really bearish. So monthly, weekly, and daily look quite good for shorts. The H4, not so much. So the way I trade is I'll look at these higher time frames for context for the overall and dominant trends. Then I normally go to the H4 to actually execute the trade. Maybe the daily time frame is very situation dependent, but H4 is by default. In this case, I don't see anything. So overall, we're just kind of sideways. There's no real trend. The moving averages are flip-flopping around. So, we've got the cross here, we turn bullish. We've got the cross here, we turn bearish. Looks like we may cross again, but currently there's just nothing here. So I think CAD Swiss could be a good short, but it'd be more now a case of timing rather than direction. I think the direction is pretty much set. So that's my view. But yeah, in terms of actually showing you an entry, I can't, because I don't see anything. I don't want to sit here and try and force something and give someone an idea that there's low quality or something like that. Currently in GBPCHF shorts, the swaps. Yeah, that's what I was saying. Enjoy those swaps. Yeah, feel the pain. I didn't trade. Hold on, let me just check this schedule, make sure I'm not running over. Okay, we've got 5 minutes. I didn't trade UJ swing from M1 because I thought there may be more intervention, as we did see a lot of random M. Yeah, I do agree, Bashi. Dollar yen was a little bit of a mess at some point, but yeah, I think, I'll be honest, my personal opinion, stay away. It's one of those things where you could, again, if you were buying these lows, fantastic. You would have been very happy. You would have been making money. But really within this type of range here, you're really at risk, And it's just not a risk I'm willing to take. I just do not see the reason for me to take that. I don't know where my thing's gone. I just drew the level and it seems to have disappeared. I must have done it on a different broker. Anyway, yeah, so let's just have another quick look. UK 100. So UK 100 could be okay. But the question really is, do I want to be exposed to the UK economy? I don't think I'd mind. I mean, it is obviously having a fantastic run here. So if the EdgeFinder is there and the trend is bullish, I'm not going to argue it. H1 looks quite nice. I think the H1 really would just be a case of waiting for pullbacks. We've obviously got this trend, pullback, continuation type of price action. Very simple stuff. H4, however, looks not great. So again, range bound on the H4. So I think what I'd need to see here is a decisive move to the upside, moving averages cross bullish, and then wait for a pullback. And that could be the opportunity to get long and basically just buy and hold rather than it being, hard to take profit. But yeah, I think it's a little bit unclear. The daily actually looks okay. So maybe something like this. And this isn't great, but I actually don't mind it. So it'd just be a case of, following the trend, very simple buy opportunity, stop loss below the lows, and just let this trade or let this market do its job. I think that would maybe be the easiest approach here. UK 100, such an annoying market. I don't trade the UK 100 purely because it's so horrible. So yeah, I agree, Ocean Beats. UJ's a hard pass. Sluggy, it seems like we're on a similar wavelength here. I think inflation could be a good thing for Nikkei. How do you mean, Sluggy? Do you mean the US inflation? Do you mean Japanese inflation? And why so? Need a bit more context. Oil today actually seems to be having a bit of a recovery. Maybe I've missed a headline. Have I missed something? Because last time I heard, we were getting a bit more optimism. You think Japanese inflation could be a good thing for the Nikkei, Sluggy? Interesting. What makes you say that? Because, and the reason I'm asking you why you say that is because typical thinking would normally lead to the opposite conclusion. Obviously, higher inflation, higher chance of rate hikes, which are normally negative for the equity indice markets. So I'm just thinking if there's anything else. So yeah, we're in soybeans. I'll be honest, I've got no idea what's going on with soybeans. It's not my trade, but we are long. And the daily, the H4 timeframe does look really good here. So I'm not really sure why I'm clicked on soybeans. Again, I can't really give you any information there. Nat gas looked quite interesting. Again, it's not something I trade. I'm more just trying to yap for another couple of minutes until we get Tiger to come on. So nat gas, depending on how you look at it, could be quite a good buy low opportunity. The technicals, though, not great. I mean, we've obviously got this bearish trend here. Bearish H4 candle close. So yeah, I'll be honest, nothing there. I'll skip that one. Silver, no, platinum, copper. We are long copper, as I've already said. Aussie 200, nothing there. Yeah, I'm just doing a quick scan, see if there's any interesting technicals that are popping up. And I don't think there is really. Oh, US 30, interesting. So we're currently seeing US 30 double topping. So previous all-time high on US 30 acting now as resistance, and we have seen multiple rejections of this level. Could be a little sign that we want to head lower. Similar thing to the S&P, we are quite deviated from our 200 daily moving average. So it might be a case really that we could see some profit taking off this initial rally that we did see. A little bit of profit taking, maybe just into the previous support level, or maybe a bit lower into this 200 moving average, and then a continuation higher. I'm a little bit more in favor of a larger downside move on the US markets, purely because we've got we had such an aggressive move to the upside. And there's a lot of sort of impulsive candles, generally speaking, in markets. You can see these types of candles get corrected. So yeah, I'm not overly optimistic in being a buyer, to be honest. I think trend-wise, obviously, but I'm just saying, if we do a little bit more micro analysis, I think it's a little bit flimsy. Yes, Yes, in none cases, bearish, but this time Japan has struggled to keep inflation high, which is given context, Japanese inflation is so low. Slight inflation is good for equities. Interesting, Sluggy. Very good thinking. Okay. So let's just do another quick review. Yeah, so copper's looking good. I think copper might be the play. I've been talking about copper a little bit now and again. I do think, along with silver, I think copper's a really good metal to accumulate. I think it's got a great industrial usage. To be honest, I do think it's quite cheap, like long term. If we're thinking about how parabolic silver went, how parabolic gold went, the use case for copper as well, I do think we could see copper start hitting $10, $15, $20 long term. When I say long term, I don't mean like in a few weeks. I mean, 3, 4, 5 years down the line. So I think if you can get into copper, whether it be like an ETF, a miner, some exposure to copper, I think could be quite beneficial. Again, I need to clarify, not financial advice, just my personal opinion. So, yeah, I think that's pretty much it for me. Ladies and gentlemen, have a fantastic rest of your days. Thank you for being here. Don't go anywhere. You've got Tiger coming to take over the show. Guys, enjoy the rest of your day. Stay safe. Don't get margin called. And I'll see you all tomorrow.
This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
What's going on, everybody? Happy Thursday. Hope you're doing well today. I'm on to kind of close out the show yet again for you. So as always, let me know in the chat box there if you have any specific tickers you'd like me to look at, or any other thoughts or questions that you might have. And I definitely take a look at them. EdgeFinder is a little bit on the slim pickings side right now. But I do have a few possible opportunities to offer up as far as what I'll be looking at, really kind of going into finishing the week. Not so much looking at a whole bunch of my normal daily 4-hour type trades right now, as I prefer to look at those in the earlier part of the week as always. So when Thursday and Friday come around, I tend to drop into some lower time frames, see if I can't take a shorter term intraday type trade. And I do have a couple opportunities, although we still need to wait on one of them because EdgeFinder is just giving us a +4. So it's just right there. Tomorrow, we do have the University of Michigan sentiment coming in for the US dollar. So I don't know. It's more of a medium impact release, but we'll see if that might be able to help push it up a little bit. I don't know. Yeah, there you go. The OM consumer sentiment that'll be coming out. Still pretty much in the contractionary area. So it's going to be interesting to see if we get any higher on that. I don't know. You got a lot of people here struggling when it comes to putting gas in their car and paying their bills and things. So I don't know how positive that could be, but we shall see. And just taking a look at the PMI data that we had come in for some of these currencies, although they do show as medium impact on Forex Factor, they obviously go into a bit of importance when it comes to the currencies that we do follow. So as far as I think the main thing I saw on here was the British pound. Taking a look at their services sector up here, they actually went from expansionary territory comfortably down to contractionary territory. So that's a huge drop, guys. Anytime you go below that 50 baseline, that starts putting you in more of contractionary territory. And so that's basically what their services sector is looking like when it comes to the flash numbers anyway. So I thought that was of note to point out. Pretty much a little bit of a beat on the manufacturing side, but services, yeah, I'm sure they're not liking. I'm sure they're not appreciating that over in the UK. So that was the main one of note. Got several up here actually. Just take a look at Euro, some of these France, Germany, some of these other numbers up here going from expansionary down to contractionary territory. So that was of note. Governor Bailey's flapping his lips as we speak, I do believe. And then that's basically it as far as your high impact economic calendar events. Retail sales coming out while we're sleeping here in the States for the British pound overnight, and they're expecting a drop as well. So not the greatest data, especially for the British pound. So that was of note for that. And really, when it comes to pound is in free fall after the data. That's right, Sluggy. So yeah, we'll take a look at that as well. But as far as the trade ideas I had, just kind of taking a look at the EdgeFinder, we did have dollar CAD pop back up to our bullish list there. So that's probably the number one I'm eyeballing, kind of going through the rest of today into the whole of the session tomorrow. And then dollar yen, although it's a +4, I do believe, it's right there on the cusp. And so that's just a couple thoughts that I have, and just taking a quick look at these. I'll start with dollar yen since it's not technically on our list right now. The key here is, and Alan actually put out a really great shorts video, guys. If you haven't seen it, I can't remember if I saw it on his YouTube page or Instagram or what, but he basically talked about all the intervention that the Bank of Japan did. I don't know how much it was. $83 billion, I guess, is what they spent in pushing these prices down to try to, increase the value of the yen relative to the dollar. But the key here is each time that's happened, it's pretty well just started chipping its way back upwards. So it's all about the interest rate differential. So he mapped that out and explained it perfectly. I definitely encourage you to go check out his shorts on that if you haven't. But anyway, when it comes to dollar yen, just trying to take advantage again of a shorter term trade. Not something I'd be wanting to be in for my normal, 3, 4, 5 days, but just like a shorter term intraday trade. Just kind of taking a look on the daily chart. What I like about this is, number one, our 8 is above our 21 EMA, and we have yet to bounce into that overhead supply zone. So again, this is my daily right here, followed by a 4-hour up top, which the only thing I'm interested in, and again, this is if we get one more piece of dollar strength or a piece of Japanese weakness, whatever the case is. I didn't see any Japan reports coming out until next week, but I just don't want it to bounce into that first. So if I drill down onto a 1-hour chart, okay, I'm kind of keeping an eye on this level right down here. Now, again, guys, the smaller the time frames we go, the noisier it gets. Okay, so I am keeping an eye on this little zone structure right here. That did give me a little bit of a gap up after we had that 1 hour of basing action plus whatever remnants of this wick previously. But the point is, we did break some structures over here to the left. So I am interested to see what happens if price drops in there, to see if we can't take a little bit of a, just a tiny amount, just a few bucks, and just take it back to the top up there. Not looking for, 150 pips or, 200 pips, anything like that. But that is a little bit of an opportunity, basically about the 50% if you draw your fibs up there as well. So that's one I am keeping my eyes on. And then obviously if you drop it into a 15-minute, guys. So when I do my shorter term intraday trades, rather than dropping down to the 4-hour, the 1 hour, I drop down to either the 15-minute or the 10 or the 5. I don't like to go 10 or lower. I prefer the 15 mark. So basically, the idea is over here, I've got my 50 EMA, just like I show on the higher time frames. I've got my 50 EMA above the 200 EMA. And the cool thing is the 200 EMA is already going through the zone as we speak. So, even if we don't get anything good tomorrow to push this up to bullish, I'll still keep an eye on it going into next week as a short-term intraday trade. But the number one that I'm actually keeping an eye on right now, here. Yep, there you go. Okay. So yeah, just the dollar CAD is actually the one I'm keeping my eyes on. So again, it's a +6. Reset this chart a little bit. We're getting the same picture on the daily, guys. So in context, just as a refresher, we bounced into a daily zone of demand. And I don't know why I have that green. I should have that yellow just for my own color coordination. But nevertheless, we've already dropped in. We got the unfilled orders, and it's been pushing us out. So the demand zone did its job. So that's the context of this move, in my opinion. We left the zone. We broke some of these structures right here with these wicks. Of course, on a 4 hour, 1 hour, it's going to look a little more pronounced, if you will. But the point is we're pushing up solidly on this. And when we drill down, first of all, when I go to my normal 4 hour, okay, 4 hour, we could basically look at this as its own little 4 hour zone. I just feel like, well, and I still may do that, to be quite honest with you. I may just take into account this whole 4 hour candle. So I guess by definition, that is my daily 4 hour confluence. I guess I didn't really scale out earlier when I was looking this idea up, but nevertheless, got a 4 hour demand. So 4 divided by 4 is an hour. Let's go down to an hour and see what we've got down here. We do by definition have a gap. That's why I drew it like that. This is why I didn't care about the origin, guys. Normally I tell you guys I like the origin of an overall strong move. But in this case, when we look straight down, what color are those candles on the VSA? Blue. That means no volume. That means nobody gave a crap about price at that point. So that's actually why dropping it down even further to a 30-minute, that's why I actually paid a little more attention to this 30-minute zone right here. Because at least on the 30-minute, we started getting the volume to start pushing price up. And again, it really kind of started from there according to the volume, okay? The tick volume, the trading activity. That's really, in my opinion, kind of the linchpin to this whole move up, which of course broke structures, which is one of my personal rules. So even though this was the low point, there just was no interest. There was no activity down here. So somebody asked me yesterday about VSA. This is why I use it so much, because if nobody else had interest down here, meaning there's no institutional type activity, then why the heck would I care? Why would I want to trade there? I don't. I want to wait till the volume starts coming in. Now, it's not my normal yellow bars, okay, that I prefer to have. But on the smaller time frames like this, I'm a little more lenient, because think about it. For the most part down here, we're pretty much trading with retail traders, okay? The bigger banks, the institutions, the Wall Streeters, okay, they're all typically on the higher time frames. They're not playing in these noisy areas. So I'm just trying to take a few bucks from the retail traders at this point, because we still have a gap and we still did break a structure point. And then we do see where at least the volume started coming in a little bit. And this was also later in the evening. Okay, this was 8 p.m. my time, Central Standard Time. So 9 p.m. Nick and Company, okay, EST. But for me, that's an okay amount of volume for that particular time period. Now, dollar CAD, I mean, again, this is the Asian market we're talking about when that was kind of formed, I do believe. Let me turn on my sessions tool. Yeah. So this is basically towards the center part of the Asian market. Again, I don't normally like to trade from the Asian markets, especially on the higher time frames, unless it's a Aussie, unless it's a yen, unless it's a Kiwi. Okay, stuff that's actually traded in the Asian session. But with this being kind of out of session, I feel like that's a pretty decent amount of volume for that time period. So that's why I'm going to probably take a stab at this area. As always, guys, not financial advice, just showing you what I'm interested in. So do your due diligence if you decide to get in any trades, okay, as always. So I need to actually put an alert there because I just realized I didn't do that yet. And that'll be one of my game plans for the rest of the day / tomorrow. Just see what we got. And I'm not going to push it out any farther than the end of the intraday session tomorrow, because, you know, by the time this thing kind of works and moves and does its thing, I mean, this thing could be way up here. And by the time price comes higher and higher, this zone gets less and less relevant, in my opinion. The only reason I'm paying attention to it right now is because price really isn't that far away. It's only about 30 pips away, you know, between 20, 30 pips. If this thing starts coming all the way up here and doing all this and doing all that, that's when I lose interest in that zone, because at this point it's too far away. And then if it does start to return, well, now what are we starting to form? Lower lows and lower highs on this particular time frame. So I don't want to catch a falling knife at that point. So that's just a little bit about what I'm looking at, guys. Again, kind of echoing the crowd. Still just pretty much wait and see until we figure out what the heck they're doing in the Middle East. We're broken records. That's all we talk about. Yeah. Oh, Basha, you're asleep then? Yeah. Yeah. Well, hey, we got to sleep sometimes. I've already missed a couple trade opportunities this week just from being asleep. Not quite a vampire just yet, although I feel like it sometimes, because I don't usually get to bed till about midnight, guys. And then I turn around and get up between 5 and 6. So I probably average about 5.5, 6 hours. It's probably not good for me, but I don't know. When I was younger, I could sleep 10, 12 hours during the summer, right? Stay up all night, sleep all morning, get up around 1, 2 p.m. That was what I did in my younger years. But now you get a little older. Of course, I'm in my 40s now, guys. So if you can believe it or not, I'm in my 40s now. So I just don't require as much sleep. So although I still need to figure out something, take some melatonin or smack a spatula on my head or something. But anyway, yeah, I'm right there with you. I lose trades as well. Shall we look at some indices? Of course we can. Of course we can. Let's do that here in just a second. So yeah, that's basically about all I wanted to say on this, guys. Again, if it keeps growing and if it gets too far away, I'm just going to lose interest at that point because it's just too far away. Last thing I want is to buy if it's if it's making lower lows and lower highs. Okay. For me to want to have interest in this, I just want to see it kind of come down kind of quick to close that gap. And then this is where I really want to start seeing that contraction, maybe a little expansion on the upside to sweep liquidity on the bottom and then buy it. That's kind of how I'm looking to play this. Okay, this is where we kind of get our master pattern consolidation on the smaller time frame. Okay, consolidate here. And then again, break structure to the upside, liquidity sweep down, but this time sweep the liquidity, but also bounce into the unfilled orders. So that's what I'm looking at, guys, really going into tomorrow. I haven't been doing a whole lot of short-term stuff like this just because I'm so busy throughout the day. So it's kind of nice to see an opportunity here for Friday. Indices, yeah. Indices. Take a look at some CFDs. Obviously, they're all neutral. Just kind of hanging out for the most part over the last week and a half. It's not like we're getting any stretch. Okay, we've basically been getting, just having a look here on a daily. Okay, we obviously had the screaming Mimi run up that we had, and then everything's just kind of slowing down a little bit of late. And again, guys, all this is interconnected. Okay, it's all interconnected. It just has to do with the wait and see mode. I mean, it sucks to have to say that every day, but that's for the most part, that's where it's at. Now, I will say the dollar did get some strength. We'll take a look at that here in just a second. But as far as moves go on this, as far as like where I would want to trade, assuming, which we don't, but assuming we had a bullish signal on the indices on the EdgeFinder. And let's see, what did I have? I thought I had one up here yesterday. Maybe I did, maybe I didn't. Yeah, that's the thing. With the way these moves have been screaming upwards, it just hasn't really created the greatest of zones that I like. And not only that, guys, this has been a slow, gradual rise. See these candles over here? See how the daily picture looks great on all of it. So now that we know that, I'll just go back to a one chart view. But the problem is, or the challenge I have with my trading style is all these moves that have just continued growing, the candles are so small. There's no explosive moves. I need explosive moves for my zone trades. I don't like this slow, gradual crap, for lack of a better word. It's lazy. It's consistent, but it's lazy and it's not really explosive. Now, obviously, you get an explosive move down over here and then followed by a little bit of explosive move up. That's a 4-hour chart. So did we have a zone of demand in here, which just so happened to maybe coincide with some of this very tiny, very minor resistance. Resistance becomes support. I don't know that I'd be confident enough to call this a resistance because it's not like it dropped very far, but nevertheless, it's a little bit of a structure. So, you know, taking a look here on the Nasdaq, let's go from a 4-hour to a 1-hour. Did we have anything over here? Might have had a little bit of a play. And it looks like the play has already been made, right? This was the only like minorly explosive move I've seen. So, you know, if we drew that up as a zone of demand over here, the volume was okay. The volume was better in the drop in, or the drop. And then you had the base, which was that candle there in the middle. That's that last yellow candle at the bottom, slowing down. And then on the way out, the volume was still elevated relative to like these candles over here, but it's not like it was explosive. Okay. Pushed up, didn't immediately push and break that structure, got lazy for a few hours, it looks like, and then finally continued these slow, boring candles upwards to where we did eventually break the structure. It just wasn't as explosive as I like to see. Now you see our blue dash line. So somewhere back to the left, we had a former resistance, former support, one of the two. I should probably color coordinate those so I know if it's a former resistance or former support. I just thought about that. I'll probably play around with that after hours. But nevertheless, zone of demand, and what happened? Price bounce in. It did peak through, so depending on how tight of a stop loss that you had. If you had a too tight of a stop loss, you'd have probably been cut out of that trade. But if you're focusing on 2-to-1s, 3-to-1s, then let's just measure it out, shall we? Price comes in here. Let's say you buy a little bit of a breakout of that candle to the top. That's 758 points. 758 divided by 2 is 375. Okay, so that's 350. So 2-to-1, you'd have been in the trade still. And it's obviously incomplete because it's still going. But that's about the only move I really see, because none of this on any of the time zones is going to be of interest necessarily to me to be trying to buy this thing. Just basically need a deeper discount. And again, just scrolling over here to the left, I don't see anything but boring, lazy candles on the Nasdaq. Same thing on the S&P. And there you go. There's a similar there. Well, there's that zone I drew up. And then looking at the Dow finally. Dow is really the prettiest picture, I got to be honest. This is the prettiest picture because of the more explosive push out of this area. This is what I need my zones to look like. Base and then explosive candles out, guys. You see the difference? That's what I need, which broke structure. So I am still keeping an eye on this zone. It hasn't come down yet. Until the indices go to bullish, I'm gonna probably just ignore this. Gonna ignore it. But if it gets a bullish signal, this is great. This is trade number one. I'm ready to roll with the Dow. Anyway, and as far as the dollar goes, I don't know if it updated yet or not, but we did have that. Excuse me. We did have the what was it? I missed something. Yeah, the PMI data come out. So we did have a beat over there. And I don't think it's updated yet. So actually the dollar's gotten stronger, guys. We were at 40%, I think, going into this morning or late last night. We're up to 50. And now we've still got to get this to update. When this updates bullish and this updates neutral, then our score is going to get a little stronger for the dollar. So it's going to start looking a little better. Taking a look at the macro over here. Okay, the dollar at 50%, so it's gonna probably jump up a little higher in the 60s. So still not like overly strong, but stronger than it was at 40. All right, guys, I got like 7 minutes. Any specific tickers? Let me know. I'll be happy to see what we got here. Oh boy. All right. So anyway, just kind of having a look at a few of these other assets. Let's see. I did have. Oh, that was Google. Never mind. I already went over those from yesterday. As far as just some other general alerts I've got set up, guys. Let's see here. Forgot where I was at. Yeah, pound Swiss, pound dollar, obviously to the short side now. Let's go look at that one. Pound dollar. Yeah, that's right. So over here on the pound dollar, I do have a little bit of zone confluence up top. I've got my 8 EMA below my 21, so that's looking good. That's in line with what I want to see with the daily, and over here on the left where we got a 4-hour inside. So this is going to be another play, guys, going into next week that I'll be interested in. A little bit higher time frame. Obviously, thankfully on this one, I get to actually use a daily supply zone for my higher time frame look. And then inside we do, like I said, we got a 4-hour, I should say. So daily 4-hour. I've got my 50 EMA below my 200 EMA. That's perfect. Price is going to be forced to pierce the 200 on its way up to the zone. Okay. There's your 200 EMA. Come on up. You got a former support resistance, that blue dash line right in the heart of that zone structure. So this is another play I like, guys, going into, well, whenever it hits. Likely maybe tomorrow, likely by next week. Excuse me. But in lieu of the dollar getting a little stronger, it could just run away without us, right? We could get we could be seeing a drop on the pound dollar. And the pound itself has actually come down from the graces it was in. Remember, just a week ago or so, the pound was still at 100% up here with the euro. And now they've both fallen from grace, from 100 all the way to 50. So, it wouldn't shock me at all if this thing just starts continuing its drop now. I just would like to see it give us one last gasp up into these unfilled orders. And then I'll be happy to short that. And then you got a perfect profit target down here at the bottom, place to buy to cover right here. So this will be our underneath zone of demand. So one thing, guys, when it comes to zone trading, excuse me, when it comes to zone trading, I always want to map out both at the same time, okay? If I'm trying to short in a supply zone, my rules state that I have to map out a demand zone. I have to map it out, number one, so I can make sure it's a 2-to-1 reward risk, or 3-to-1 or better. Okay, I prefer 3-to-1 or better, but 2-to-1 will work. But also to see, not only is it going to pay me enough, but do I have plenty of reasonable runway for that trade to run? Okay, and that's where we start looking at some things like ATR to see if it's realistic or not. But I always want to know, always want to have the end in mind. As I'm trying to lose my voice, have the end in mind. That way, you know exactly where you're going. Okay, we have to know our entry. We have to know where our line in the sand is, and we have to know where we're going to take profits. So many people just hit the buy or sell button and they haven't planned any of that out. And so for me, easy way to plan that out is, okay, where's my unfilled orders? Because the unfilled orders tells the whole story. Okay, so that's exactly what I would want to do. I'd be wanting to buy to cover just ahead of the demand zone, because again, so many people will just take their trade to a swing low or a swing high. Well, if they do that in this case here, they may get some unfilled orders a little higher up in that zone, and it may just completely take away their trade. So always be aware of that. Always have the end in mind so that you don't, so that you don't have unrealized profits just completely get dilapidated. Wow. CAD long until all time has. Odd CAD. Yeah, let's have a look at that. Sounds like my voice is going to give me one more item to look at before I go get some lemon water. Okay, odd CAD. Daily looks fine, except the fact that with context, we've bounced into that overhead supply. So I really want to see, let's just say we have a buy. Where are we at? Aussie CAD. Yeah, Aussie CAD buy. So for me, I've got no real interest until we start coming down. Until we start coming down to this daily 4-hour confluence down a little deeper. Now, for a short while, we have this zone over here. Let me show you this. And we had this zone here, okay? This was a 4-hour demand. So this met the rules. It just didn't quite have the volume I wanted to see. And the other thing is we bounced in that overhead supply. So that's a daily zone up top, and this is only a 4-hour below. So if the daily is the strongest, then what I perceived is that it would be strong enough to push it from the daily down to at least the next daily, which is down here, the yellow. Okay. So that's part of the reason I didn't really buy here. Even though, as you can tell, it did pop up, and it would have been a profitable trade, by the way, because I already had my supply zone drawn out. So this was a perfect trade that I didn't take because of two things. And I miss these all the time, guys. I miss them just because I'm so picky on my rules. But I'd rather be picky than not picky. I've had a pretty good winning percentage because of it. But yes, I do miss these trades quite often, to be quite honest with you. You had a former support resistance line, which is the blue line. You do obviously have the demand zone on the 4-hour, which was the box, the rectangle. And then I had a clear supply zone. I mean, that was a picture perfect trade. I just didn't take it because I was waiting for it to go a little deeper into the higher time frame zone with confluences, with a former support resistance line, that blue line going right at it. And not to mention the fact, and I'll end it on this, is that we had this fair market value area to the left. That's why I drew this kind of blue box up, because for that 2 or 3 week stretch, prices didn't go anywhere. It came out for a minute, but it got sucked right back in. So to me, this was a magnet area that it's kind of like a black hole. And that's typically why I don't like to get in these trades. When you take a look and have all this to the left, that's basically fair market value. I like to buy under fair market value, which is why I waited on this zone. So anyway, I'm okay with losing that, or not losing, just missing out on the profits or missing out on the trade, because I'm waiting on the bigger discount. And then obviously your take profit would be just ahead of the overhead supply zone that's already been mitigated, but I still would want to use it for profit taking. Ladies and gents, hope you learned something today. And we'll be back next week. It's about all there is to it. Stay safe out there. Have a wonderful, good grief. Today's Thursday. We'll see you tomorrow. Talk to you.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.